All right. Hello, everybody. Welcome back to another episode of the Market Close. I feel like I'm handing in my homework late, which I am, but I have a good reason for it. My dog did eat my homework, and that's why I was not able to hand it in today. Thank you, everybody, for being here. We got a lot to talk about. Yeah, I missed the market open. I need to make sure I don't yell on this stream today because otherwise I'm going to miss the next couple of weeks. But I legit lost my voice this morning, and not like literally I couldn't speak, but when I woke up pretty early. I woke up like at 6 a.m., almost 3 hours before the show starts. And I just started looking at the news, started reading stuff, trying to get ready for the show. And then like, I like opened my mouth and I was talking to myself, and it felt weird already. And then I tried to say good morning, like as if I was starting the show. And I was like, oh my goodness, my throat hurts. Like my throat legit hurts. And I was like, I can't talk for the next 3 hours like this. Like there's just no way that I'm going to be able to do it. So I think it's the first time I took off and no, this is the first time I took off for something non-travel related in like, I don't know. I think most of 2026. I don't think I took a sick day in 2026. So maybe I took one or two earlier in January, but I think that was more so traveling because of CES. So yeah, my voice needs insurance, legit. Legit. Did you chat GPT that excuse? No, honestly, dude, there was so much to talk about in the morning. Like I had so much ready to go. I had prepared last night. I had bookmarked everything I needed to talk about. Obviously, we had Google, Microsoft, Meta, we had a lot of stuff to talk about. And then I was just like, I can't talk. Like I just can't do it. So, yeah, I am a lot better. Drank a lot of tea, slept for like another 3 hours, and I think I'll be okay. But if you see me yelling today, tell me to stop yelling. And I'm going to try to save my excitement when we see some of these earnings so that I don't get super excited, because I need to protect my voice, dude. It's like it was bad in the morning. It's better now, but I had to like shut up for the past 4 hours and just not say anything. But all right, we're here. We're back. Yes, I got all the hot grinder date jokes last night, which is why my throat is hurting. You guys got to be more original. If you're gonna make those jokes, you got to be like, you've made those jokes like too many times. So we need some originality. If that's gonna be the reason for the jokes that you make every day. All right, so bunch of different things we've got going on today. We have Zeta earnings are going to be very important, which is getting a little bit of a bid right now. We have Sandisk earnings, which is also going to be very important just for the memory trade. We have Apple earnings, which is obviously going to be very important as well. And then we have Reddit. So we're going to talk about some of those earnings in a bit, but let's recap big tech. First of all, I woke up, I think at like, wow, AMD pumping right here. I mean, I woke up early, then I fell back asleep, then I woke up, then I fell back asleep. I think I got back up at like 11:30, and I saw some of these prices, and I was like, what the hell is going on? So Amazon, which I thought was going to blast through all-time highs, got hit. Look at this candle as soon as the market opened, 273 to 258. Like, what is that? Like, how did that even happen? Now it's recovering, which is nice, to 266, but still, that was crazy. Microsoft, they just had no respect for. This one got up to 430 last night, right back down to 408. That's down. I mean, it was at 398. Could you believe that? They took it down to 398. Now it's at 408. It's nice to see Meta getting a little bit of a recovery, but Meta, my goodness, I absolutely could not believe they did what they did to Meta right here, taking it down from 670 to 600, literally on the dot. It didn't even go below 600 today. I like, look at this. I think the market makers on the dot pinned it at 600. Yeah, market's acting like Microsoft missed, and now they're trying to take it back up a little bit to 618. So we'll talk more about Meta. Google's the one which it seems like the market's in love with, and for good reason. The earnings that we saw from Google were unbelievable when you really look at the scale that Google put up in the numbers for. 381 up 9%. Google now $4.62 trillion company, up $420 billion in one day on market cap. Absolutely incredible. Grew cloud by 62%. They did no buybacks for the first time in a couple of years. They did no buybacks, but they grew the business, which is what they need to do, right? You can either grow EPS through buying back stock, or you can grow the freaking business and invest, and that's what they did. So they spent more CapEx, got better growth, didn't buy back stock. Street loves it, up 10%. Google did what they had to do. Meta right there down 7, AMD up 4, Amazon up a little bit, and then you had Microsoft that was down on the day. Now, NVIDIA, this is another thing I saw in the morning, which was also very weird. NVIDIA was down below 200, which I didn't understand at all. Because all the big tech companies are spending all on CapEx. So why the hell is NVIDIA down? Like, that didn't make any sense to me. It was just a weird morning and a weird market reaction. At the same time, what's also making this very weird, S&P's at all-time highs. S&P's at all-time highs. NVIDIA, Meta, Microsoft clobbered. S&P at all-time highs. You know what else is catching up today? Oil. Now, it's down, which is good, but the fact that oil is above 100, still down 2%, but it's above 100, and the S&P is at all-time highs, once again, leads me to believe the market does not care about oil anymore, which is, I think, bullish. I think. I hope I'm not being optimistic or naive when I'm saying the market doesn't care about oil, but over the past couple of days, it seems like the market doesn't care about oil. They care about earnings. But then the companies that are actually putting up earnings, like Meta, Microsoft, and Amazon, the market doesn't care about. So it's just a weird reaction to all the earnings. And the real winner here was Google out of the big four. Obviously, the other one's getting a little bit of green. Apple also getting some love before they have their earnings. Tesla up 3% today. But Microsoft, NVIDIA, Meta really got hit hard. And, they couldn't get the love that I think some of them deserve. The rest of the market, though, relatively green. Consumer defensives, industrials, real estate, healthcare. All of those are up, which is at least good to see. The biggest slide on Google, let's just go through these earnings one by one, and then we'll get into the preview for today. This was the big slide on Google. 63% cloud growth, unbelievable. 16 billion tokens per minute, 350 million paid subscriptions, 500,000 Waymo, fully autonomous rides. Search, 19%. Are you kidding me? This thing was almost at 8% a year and a half ago. It's at 19%. Top line revenue at 22%. $460 billion backlog, up from 240 billion last quarter. Like, it was just a remarkable Q for Google, and it ended up being the winner if you had an earnings play. It wasn't Meta, wasn't Microsoft, wasn't Amazon. It seemed like it was going to be Amazon for a second, but it ended up being Google. 460 billion GCP, unbelievable for the Googs. SoFi and Robinhood getting a little bit of a rebound today. Obviously, both of those still got hit over the past couple of days. SoFi up 16, that's up 3%. Hood, I think above 70. It was below 70 yesterday, 72.87. So a little bit of reprieve, but obviously a lot of those names got hit back. Qualcomm, this was an interesting one, up 15% on the day. Qualcomm didn't have a good earnings, but they mentioned that they're getting ready to get into the data center world. And I think because this is the semiconductor name that hasn't run, everyone's like, okay, this is the one that we're going to bid up. And, we kind of talked about it over the past couple of days that there was a possibility that would happen. Qualcomm ended up dumping as soon as the earnings came out. And then the CEO said, well, we're going to enter the data center. And then, boom, it's green. And it ended up making a move. So I don't know how many people went super, super heavy in Qualcomm, but if you did, you got rewarded. And obviously there's a lot of chasing of it today. Nokia was pumping yesterday after hours off that same thesis that, like, hey, they're going to get involved in data centers with NVIDIA, got up to 13, dumped in the morning, now back at 1274. I think the takeaway based on everything that I've seen over the past couple of days in terms of covering earnings is, if you are, and Chamath actually had a good tweet about this morning, if you are making hardware for the AI data center infrastructure ecosystem, you are getting all the money that traditionally businesses with amazing gross margins, like software companies and even hyperscalers like a Meta, used to get. So now you're like, it's like a complete reversal over the last 20 years is what he mentioned, which is, if you were building software, the hardware companies that helped you build the software, they were secondary to the actual output of the software. Now, if you're Meta and you're growing 33%, but you don't have a cloud business, you don't have CapEx that's leading to any type of AI infrastructure, you're the one spending all the money on all these derivative companies like a Qualcomm, for example, which I don't know if Meta is necessarily spending on, but that's an example of it. Qualcomm is the one getting the money, even though they have worse margins and worse, free cash flows than Meta, but nonetheless, they are the ones that are like the bottleneck, I guess. But again, does that make sense for NVIDIA to be down then if all the hardware companies are getting the benefit? No, but it is what it is. And I guess that's how the market is treating it. NVIDIA down 4% on the day. AMD at least getting some of that love. Intel almost, it did pass 100 last night, and then it kind of topped out there for the short term, 93.57. That's now down 1.57%. SMCI also, yes, not really getting that love. It's up 4% on the day, but it hasn't had the type of run like a Dell has had, which Dell's a perfect example. $208, all-time highs. Or all-time high was 221, but it's kind of getting back up there. The reason they're getting this love, even though their operating margins are like 5%, which again, it's confusing why they're getting so much love over the other guys, but the other guys are the ones giving them the money, and that's where the market wants to put their chips behind. So that's what you got. It's weird. It's weird to say the least, but it's the nature of this market. And obviously, I think the core takeaway is CapEx is increasing in the market. is liking the ROI on CapEx, even if the hyperscalers like a Meta aren't getting that much love that they're getting, that you would think they would be getting. Meta's forward PE, yes, is now 14, which is kind of crazy. Dare I say Meta is Google in 2025 based on the numbers that they put up. But I mean, it is what it is. This is the nature of how the market's thinking about it. Trump is live. I don't think he said anything too crazy about the markets. He was signing an executive order. Yeah, NVIDIA, unfortunately, not getting any love on the day. Trump's son have taken a stake in a mining firm that secured a $1.6 billion U.S. contract, a Kazakh mining firm. What the heck is this? Financial Times just reporting it. Copper mining company. Trump's son just took a stake in a copper mining company. Okay. I don't think there's a ticker on that, so you can't trade it. But they have a couple of clips from Trump we'll pull up in a second. Meta also sold $96 billion of bonds today. So they ended up selling some more of debt to be able to finance all their CapEx, which I think the street is not in love with as well, although they were oversubscribed. So, I mean, they sold a crap ton of it, which I guess is a good thing for Meta to be able to get all the money that they need to keep doing what they're doing. Okay, so we talked about Meta. We talked about Microsoft. They crushed it on cloud, guided for 40% growth on Azure. Amazon didn't really say anything on the call that was new, to be honest. You know, everything Jassy said that got the stock to pump last night, overnight, he said in that memo. So I think the street just finally heard it again. The whole, we're a $50 billion business, AWS accelerating, yada, yada, which it did accelerate pretty nicely from 24 to 28%. I don't understand why it dumped in the morning, but nothing they said that was that new, but you know, it probably deserves to get a better bid. Unfortunately, it's not getting that right now. Zoom got a pump because Anthropic is potentially looking at a $900 billion valuation now. So the fact that Anthropic is also pumping, that's another reason I think Google and Amazon got a bid, or at least Google more so than Amazon before Amazon got a little bit more last night. Google and Amazon both own 15% of Anthropic, and Anthropic's raising at double the valuation that they were at last time, more than double. So, you know, why wouldn't Google also recognize that? And their stock would go up as a result of that. Google 382, 4.63 trillion. NVIDIA right now is at 4.8. So Google is not far away from becoming the largest company on the planet. And if NVIDIA has any hiccups in their quarter coming up, you know, maybe that ends up happening for the Googs. AMD right there, 353. That is up. I don't know why that's up today, given Intel's down, but I think Qualcomm's comments around CPUs and entering data centers are just leading the street to be more excited about AMD. And that's why that one is getting a little bit of love. Is Quantum pumping? D-Wave is, wow. What happened to Quantum today? Up 10%. Is IBM catching a bid? IBM a little bit. Rigetti also catching a bid. Who said something good about Quantum? Not sure who, but someone did. Here's Trump talking about Iran. We'll get back to that, and then we'll get into the next three earnings that we have coming up today.
Has decimated them. Yeah, please go ahead.
Mr. President, two questions for you. Leah Shirazi from the Daily to this question.
Now, look, Iran killed 42,000 people over the last 2 months, protesters. They were going to kill 8 women whose lives I saved, and I appreciate that they didn't do it. I asked them not to do it. They didn't do it. They were getting ready to hang the women. They were going to hang 8 beautiful women that were, I mean, it just caught the imagination of a lot of people. People were talking about it. You know, it was inconceivable. You saw those 8 beautiful people, and they were going to be executed that evening. This was a week ago. And I got on the phone very quickly, and I said, don't do it. Don't do it. The whole world is watching. Don't do it. And they didn't do it. I appreciate it. I guess 4 were released, and the other 4 are going to be released in a month. They were ready to be executed that night. So they take a tough, you know, they knocked out the wrestler.
That's the most we have from Trump on Iran, talking about these 8 women. I don't see any specific things he talked about in regards to negotiations. It looks like those are still up in the air. It does seem, guys, like the bombing is over, and I don't think the bombing is going to happen again, especially because they are trying to settle on some level of a negotiation. I mean, will we really get any meaningful negotiation? Who knows? But kind of that anxiety I think everyone had about Trump going back and forth and going into war, I think that's done. I think the market's pumping on oil just because of all the logistical challenges around refineries that have been getting hit over the past couple of weeks. But I don't know if we attack them again. And, the fact that the headlines have been rather calm this week in particular, even over the weekend last week, there wasn't anything too intense. Hopefully, as we enter into the month of May, there's not going to be anything too crazy. And, if he's talking about saving women and stuff, maybe some of the tensions are coming down and the negotiations come in. But again, 7,200 on the S&P, market doesn't care. Market does not care. It cared a little bit on Monday when there were some questions on if we are going to end the war or not. And now, though, after those earnings, even if the individual stocks like a Microsoft, Amazon, and Meta aren't up today, the market is. And so it looks like big tech did what it had to do in order to keep things going. All right, so the other earnings that we have today, Sandisk, Reddit, Zeta, and Apple. I'm going to put a poll in the chat. Which one do you think people is going to outperform? Out of all of these, I own Zeta. I think I'm just going to put it out there. I mean, Sandisk is going to go to 2,000, right? Like Sandisk is going to go to, or at least 1,500. I mean, if Seagate is any, representation of what's going to happen here, that I would imagine that Sandisk is going up. We do have Roblox and Rivian. Let's make the watch list right now. Let's make the watch list. We'll cover all of them. What call do we listen to? That's the other question. I have like a hard stop at like 5:50. I got to get out of here. I think Apple starts at 5, but the Apple call is going to be boring. I feel like we should listen to Zeta. Now, granted, I think more people will care about Apple. I get it, but the Apple call is never interesting. There's not, like, literally the Apple call. I mean, I'm telling you guys are going to fall asleep during it. It's going to be like Meta yesterday. So maybe we pick something different. So let's do it. We have Western Digital, Sandisk, Zeta, Reddit, Apple, First Solar, Atlassian. Apple new CEO is not going to be on today. He's not going on until the summer. So I don't know if that's going to be the best one. Sandisk, I don't even know what their calls ever look like because I never listened to it, but I also think that's going to be kind of boring. Granted, it might have the best stock performance. We'll figure it out. We'll figure out which one we listen to. Maybe we flip through a bunch of them, but we'll see what we got. Hopefully Zeta gets us some love today, and maybe that'll be a fun one to listen to. Rick says, Amit, I miss you this morning. I missed you guys this morning as well. I saw all your comments underneath my community post. 80% of them were making fun of me, but the 20% that said feel better. And I know, making fun of me is a way to express your love, but the grinder jokes, given my throat was hurting, it's every time. It's the best. It is the best. But really, if I could have gone live, I would have been ready to go live. I mean, we had so much to talk about. I did not want to talk if I knew I couldn't get through it. All right, so let's get through the preview here. Reddit. I think they're going to do well. They're going to grow, but Meta concerned me a lot. So Meta concerned me because if their earnings were up and they couldn't catch a bid, I wonder what Reddit's going to have to do in terms of getting a bid. Now, the thing about Reddit and Meta that's different is that they're not spending on CapEx. So that might not be the reason why Meta needs to, or why Reddit needs to get hit. Meta did get hit because of raising on CapEx. Also, Zuck was just horrible on the call. Like, he was really bad. Like, objectively, he was answering quite, like, they were asking him like normal questions, and he was answering like with the tone of just like, why are you even asking me that? And I get the guy is busy, but it was weird. So I think maybe Steve Huffman, CEO of Reddit, could do a better job, and that could get the street excited, but that's going to be important. Apple, I think, is probably going green. I don't think it's going to go green like crazy, but I think 285 is possible. The reason for that is because the iPhone 17 Pro Max is sold out everywhere. My personal experience, Apple right there up 2%. I tried to buy an iPhone 17. I couldn't. So I would imagine the upgrade cycle is legit. I don't think they're going to really talk about the foldable phone or Agentic Siri, which I think are the two next catalysts to get it to move. But regardless, I think Apple should catch a bid, and that would get some love. Micron absolutely can move with Sandisk. Sandisk, I think, is just going to demolish it. It's just, put in the chat, who's buying it up 350% year to date? Or Western Digital, same situation. Western Digital is going to crush it because Seagate crushed it, but Western Digital is already getting a bid because of Seagate crushing it, so I wonder if that's priced in. Same thing for Sandisk. I wonder if that's priced in. I don't really know. One could argue it's still cheap. One could argue Micron's still cheap. Roblox, this thing is down from 150. We'll see what happens with the results. They've obviously had a lot of controversies. Atlassian's a software name. Software names have been in the gutter until they absolutely crush it. I don't have a lot of faith that a team management platform will crush it, but we're going to see. And then First Solar, obviously, solar panels have not been in the best frame of reference. We saw what happened to Enphase. They had a good earnings, but they really couldn't catch a bid. Oh, we do have Roku today as well. Let's put Roku on the list. S&P hitting an all-time high right here. That is green. A lot of people miss returns because they refuse to buy stock when it's already up. That is very fair. I don't disagree. But nonetheless, who's buying Sandisk at all-time highs, right? Like, yeah, that's what I'm saying. Like, it's probably going up. But the risk to reward, which might be even favored towards the reward over the risk, is still a little scary given it's up 3,300% in the past 1 year. So it's just one of those things where it's like, who has the ability to stomach it? And even if it dumps, it's probably going up in the future. So who cares? But making it as an earnings play is not the easiest thing. Reddit going down. Zeta. Okay, what do I expect for Zeta? I think earnings are going to be amazing for Zeta. They're going to have their second straight quarter of GAAP profitability, which is going to be bullish. They're going to grow revenues 40% or at least like 38%, which is going to be bullish. I don't know what the street would get upset about. Last time Zeta pumped, but it was a very small pump. It wasn't massive. So, does that happen again? Or is this a quarter where it finally breaks out? We're going to see. Again, I think the business fundamentals are strong. All the software names that get hit are getting hit because they don't actually have a moat or they don't have growth. You can question Zeta's moat, but you can't question their growth. They've been beating and raising for the past 18 quarters. I think they will do the same right here. And, hopefully they end up putting up some good results. Let's get an update on Qualcomm and Apple going into the print. And then we got about 8 minutes for earnings.
Well, I have to start with Qualcomm, one of my companies. It's on pace for its best day in 7 years after the longtime iPhone chip supplier said it would begin shipping data center chips to an unnamed hyperscaler by December. Few details were actually provided, but those comments more than offset weak current quarter guidance in the company's Q2 report yesterday afternoon, specifically with handsets coming from China. Rental car company Hertz announced a partnership with Uber earlier today, sending the stock soaring. Hertz' new Oro Mobility, which is a fleet management unit, will support Uber's robotaxi push, including providing charging and repairs to the AVs. The two expect to launch services in San Francisco later this year. Shares up 12%. Sprouts Farmers Market having its best day ever as resilience in a tough consumer market really led to higher sales as well as a raised full year outlook. Scott, shares up 17%.
Now, the Sprouts Farmers thing is also really important. This thing is up 16%. The job loss numbers came out today, or the initial jobs claims. Guys, we're not close to a recession. Like, if you look at the technical definition for a recession, this was the lowest number in terms of people filing for unemployment that we've had in almost 4 months. Market expected 210,000 people to file for unemployment this week or last week. We came in at 189,000. So, and then you have something like Sprouts Farmers Market, which is explicitly a consumer play. This thing is not up 17% unless people are shopping. And it kind of makes me super bullish for the Urban Outfitters, the Best Buys, all those different companies that are going to put out their earnings in the next coming weeks. And, we're going to see what number, the Lululemons, maybe the Nikes, if they can get the brand thing figured out. And as a result, if consumers are shopping, advertisers are advertising, which is good for Reddit and Zeta and Meta and Google, right? All those companies that obviously benefit from that advertising tailwind. So, like, the bear narrative now in the broader market, it's not labor market yet. And, if you have a more optimistic view on AI, maybe that doesn't come to fruition. It's not inflation because I think the market has kind of priced that in enough, and hopefully the war ends, oil comes down. That's not a concern. It's not AI bubble, right? Who thinks there is an AI bubble after those earnings? As Meta, unfortunately, loses any little bit of a pump that it had today, 618 down to 612. Like, who really thinks Google growing clouds? I need to stop yelling. I need to control my voice. You guys got to correct me when I get passionate. Got to correct me on that, or else I'm going to lose my voice for the next week, and I can't do that. Who really thinks that Google growing 63% with 400 billion of backlog, and freaking Microsoft guiding for 40% Azure? Like, who thinks? Should I just whisper ASMR the whole market close? Should we just do that? Oh, by the way, we got to talk about this JP Morgan. I'm buying some JP Morgan stock today, just out of pure principle. Okay. If you don't know what I'm talking about, look it up because it's probably not appropriate for me to talk about it. But I think I need to buy a share of JP Morgan out of some freaking principle today. But like, who thinks there's a bubble? Because I mean, after those earnings, if you think there's a bubble, like I don't like these. Meta is trading at 15 times forward, and we're gonna say there's a bubble in AI. Like it is almost it's inconceivable that would take place. Take a look at it. The .com peak PE ratios. Okay, Microsoft 73, Cisco 200, Yahoo 800. Google's at 17, Meta's at 16, Amazon's at 24, Microsoft's at 25. Nvidia's at 23. I think it's at, well, now that it's down from 217, it's probably at like 23. It was at like 25 the other day. I don't think there's a bear case from that perspective. Now, if we think there's a bubble in the Intels and the Qualcomms and all these other plays that are getting, like Intel is kind of expensive now, like some of those play, the Bloom Energies that don't even have profits, but they're up like maybe there might be a little bit of a bubble there, but I don't know if that's a bubble for the hyperscalers, which is the companies that ultimately control the S&P. The JP Morgan news is AI. Well, it was a hell of a story if it was an AI story. It was a hell of a story for JP Morgan. I just saw it in the morning. I was like, dude, that is crazy. Sorry, Google's forward PE now. Yeah, that was from last night. Google's forward PE is a lot more given the 10% move that they had today. But still, you would reckon that Google's revenue growth at 22% and cloud at 63 warrants them getting a 10% move. So I don't know. The bear case on this market seems, based on these earnings, substantially deteriorated. I understand NVIDIA being down today is really weird, maybe just because the market thinks there's more chip competition, but Meta should not be down 8%. Like a lot of these names shouldn't be down, but the fact that they are down in this type of market is more of an argument for why the bulls are potentially in control here, because we're just not super euphoric. Now, on the flip side, to counter everything I just said, if we can't rally off of those types of earnings, that might be a little toppy. Now, I know the S&P is rallying today, but individual names that really should be rallying, not rallying. And then you got Quantum that's rallying today. Like Meta's down 8, Quantum's up 8. I get they're different companies, but the Quantum names are not putting up the earnings that Meta are doing in any sense of the imagination. So that is a little concerning and weird, that type of broadening. Someone said, oh, the market's healthy today because it's broadening. But it's broadening to Intel, which, unless you think this is going to put up NVIDIA types of numbers, it's expensive. Like, it's hard to say it's not expensive. So yeah, those would be the two perspectives there. Overall, I don't think we're necessarily going to have a super bear market. Meta Chief People Officer Janelle Gale told staff they can't rule out further layoffs in an internal meeting. I mean, the layoff news didn't help them last time, but if they're going to keep spending on CapEx, I guess. The funny thing I saw today was just everyone being so bearish on Meta. I'm like, what are we, like, I get the stock is down, but they grew 33%. Like, what are we talking about being bearish on? It just reminded me of Google of last year, people being so bearish because, search wasn't growing as much, but it was still growing a lot. So, and Meta's not having any problems with growth. They're just having problems with the perception of their CapEx. But I think it's probably in more deep value territory. Broadcom 417. We got 30 seconds until the market closes. All right, so these are the earnings that we have on deck. Apple, which got a dump right at the close, which I actually think is a good thing. It's better that it's getting a little bit of a red candle versus a green candle into the pump. Zeta's a big one. Reddit, Rivian. I'm going to try not to yell when we get these numbers. Roblox, Roku, Atlassian, Sandisk. Let me know in the chat, which of these names do you own? And we are going to get ready to cover all of these earnings. April 30th, last day of April. Stock market is now closed. All right, we are closed on the day. Shout out to Mr. Derek Wall. He is in the chat. He is also a shareholder of Mr. Zeta. I know you guys haven't heard from Derek in a while. Hopefully we'll get him on the channel soon. But thank you, Derek, for being here. Markets now closed. Let's get into it. We got Rivian that closed off at 1640 on the day. S&P 500 closed at an all-time high, 718.65. Meta smacked on the day, down 9%. Apple right there, 271. That ended slightly green. Google all-time high, 384. that was green. Sandisk 1096, that was green. IBM 230 with the quantum stuff, that was green on the day. Robinhood actually a little bit of a rebound, which was not too bad. 72.89. SoFi got the $16 close at 310. You had AMD crushed it again, 354, right back to where it was on Friday. Took a dip on Monday. Now it's back. NVIDIA, don't understand why it sold off, but nonetheless, the market sold it off, down about 4.63%. And then you had Qualcomm, best day in 8 years for Qualcomm, up 15%, 179.58, as that was green. I see a lot of Zetas. I see a bunch of Sandisks, and I see a ton of Apples. So I think those are going to be the three that we're going to take a look at. All right, let's get into it. Rivian goes down 1%. Rivian is down 1% to start us off. We should be getting all the numbers in a second. Let's pull that up for Rivian. Looks like Rivian missed on vehicles to start. Rivian missed by 200 on vehicles. 200 on vehicles. 200 on 10,236 versus 10,311. So they missed by about 100 on vehicles. That one is down 0.5%. Amgen had earnings today. They beat by 8% on EPS. They beat by 1% on revenue. Amgen, that stock also is down 1.69%. Zeta is up 1.5, almost 1885. Don't have those numbers yet. Roku, are we green? Roku's up 10%. Roku's up 10. Roku is up 10. Roku getting some love. Zeta, do we have the numbers? I don't see them yet. Roku now up 12%. This is also an advertising play. We know Meta, Google did great on advertising. Reddit's up 1. This is another advertising play. Don't see Reddit yet. Western Digital, 14% beat on EPS. That's up 1%. 272 versus 239. They beat by 3% on revenue. 3.3 versus 3.25. EPS is up 100% year over year. Revenue is up 45% year over year for Western Digital. That stock flat. It did get a big move after Seagate reported, so it could have been priced in maybe. I think this is a good double beat. I don't know if it's a massive double beat given how much they were up, but let's see if that one flips green. Zeta, we got 2.3. I do not see the numbers yet on Zeta. Again, Western Digital did beat. Let me see if I can get Zeta real quick. We saw Amgen. Sandisk is down 2%. Sandisk going down. Sandisk going down. Still don't have those numbers. First Solar missed revenue by 1%. They beat EPS by 14%. Beat EPS by 14%. Sandisk, now again, 1% on Sandisk is not that big of a deal given it's up 350%, but it is a little red. Western Digital also red. Zeta potentially going red right here, not able to hold on to a lot of its green. Apple, we have at 430, so we have some time for Apple. Dexcom beat by 19% on EPS. This is glucose monitoring for diabetes, if I'm not wrong. That stock is up 0.76. They beat by 19% on EPS, 56 cents versus 47 cents. Beat by revenue, 2%, 1.9 versus 1.17. EPS up 75%. Revenues up 15% year over year. Is Nebius pumping? Nebius, okay, it's not pumping. It's up 37 cents after hours for whoever said it's pumping. But I guess you're getting a little bit of love. Zeta's down. I still don't have the numbers on Zeta. It was up for a second. I still don't have those numbers. So maybe the numbers aren't out on Zeta, so we don't actually have any real market action. Reddit, we should have the numbers like right now. I don't see Reddit. For Solar, again, is up 4%. They missed on revenue, but they beat on EPS. It's 405, so like probably right now. Scamdisk, yes, exactly. Sandisk now starting to pump again. Western down 4. Okay, so Street's not liking this one. But again, it really did pump after Seagate already. Like it was at 374. It pumped to 434 over the past couple of days. Sandisk up. There you go. That's, I still don't have the numbers on Sandisk, but that's up, which means maybe the dump didn't make sense because there's no numbers. Maybe now we're going to get numbers that'll determine what we got. Zeta starting to go back green. Sandisk losing its pump now. This is pretty crazy action back and forth. Sandisk, okay, wow. They beat by 60%. EPS 2341 versus 1466. My goodness. EPS is up 7,900% year over year. Stock's down 3%. Revenue, they beat by 26%, 5.9 billion versus 4.73. Revenue is up 250% year over year. EPS is up 278% Q over Q. Revenue is up 97% quarter over quarter. Stock's down 5 after beating by 60% on EPS. Roblox, there's no way this is real. There's no way. Someone tell me Roblox is not actually down 27%. Someone tell me that's not. Someone tell me that's a glitch. That's not real, bro. What? Ew. What is going on there? Street wanted 143 million daily active users. Roblox came in at 132 million. That is a 11 million miss on DAUs. I think the kids are playing something else that you can't be missing by 11 million. Either the street completely got it wrong or Roblox messed up this quarter badly. Zeta getting a pump, 2.3. Roblox down 20%. The stock was already down 65% from the highs. Western down 6, Sandisk down 5. Now, again, that's not too surprising because those stocks were up a lot, but nonetheless, the earnings still were amazing. I hope that doesn't hurt Micron. Where is Micron? Micron is down 1. Micron is down 1. Apple is in 20 minutes. We don't have Apple yet. I'm trying to get Zeta. I still don't see the numbers on Zeta. Zeta revenue, oh wow. Is that right? 50% year over year growth on revenue? 396 versus 370? That's good. That is good. We'll get to Reddit in a second. Zeta right there, 1890, 50%. Dude, I think some of the most bullish analysts have them at 40%. Yeah, 50% growth. That's up by 26 million. Full year guidance, they increased again by 30. This company just keeps beating and raising. Athena grew 7x more agent interactions and accounted for 60% of AI platforms. EPS looks like it came in line. 11 cents expected. They got 11 cents. It looks like that's what you got. Zeta not getting a massive pump, but it is getting a pump. Reddit going down. Reddit beat by 80% on EPS. $1 versus 56 cents expected on Mr. Reddit. Revenue, they beat by 9%. 663 versus 609. Revenue is up 69% year over year. Revenue is up 69% year over year for Mr. Reddit. Zeta revenue is up 50% year over year. And Roblox is just taking a hit. I mean, that's good growth for Reddit. You can't be too upset about that, right? You can't be that upset. Reddit's up. Sorry. Reddit was down, but now it's up. Yeah, Reddit deserves it. 5%. There you go. Let's see if it can hold. 154. Apple's flat. Zeta's up 4. Okay, there you go. Zeta's getting a little move. Zeta and Reddit both should. I mean, those are, dude, I know they're both quote unquote software companies, but they're profitable and they're growing like crazy. It's not easy to compound 40, 50, 60%. I mean, if this is the new normal, growing 50% for Zeta, if that's the new normal, they're going to be doing 2 billion, 2.5 billion in revenue in no time. If they can sustain that. And Reddit has been growing 70% for, I think, almost 3 quarters in a row. This is their 3rd quarter at 69%. Sandisk still down 5. Sandisk sees Q4 EPS of $33. Street thought it would be 23. They beat the guide by $10. Revenue Street thought it would be 6.65. They're saying we're going to do 8.25. They beat the guide by $2 billion. I get the stock is down, but it's more so, I think, a function of being down because it pumped so much, not because these numbers were deserving of a downside. Reddit, there you go, 7%. Reddit deserves it. Absolutely deserves it right here. Zeta up 4. Apple, we're still waiting. Atlassian got a pump to 13. It's been a while since we saw one of those legacy software names catch a bid. Atlassian getting some love right here. We do have Western Digital real quick. Let's look at this and then we'll get into the other ones.
Q3 to $3.34 billion. The margins were pretty good for the quarter too, a little bit over 50%. The company pointing to that in the actual quarter, saying the margins improved. We did see that with Seagate, a competitor. They essentially have a duopoly on the market. For the guide, Q4 EPS came in at $3.25, much higher than what the street anticipated on a Q4 revenue guide of $3.65 billion. They are also anticipating margins to keep increasing above 51%. So an increase, and yet shares are dropping about 4%. Could be because of the run up into the stock just over the.
I think that is the reason for that. And Sandisk, they just ran really hard going into it, but the numbers are amazing. Roblox, they beat by 15% on EPS, missed by 1% on revenue. I think, again, that DAU miss, you can't miss by 11 million users. I mean, imagine Facebook came out and they said, you know, I don't know, 300 million people stopped using our platform. Like, that's just, and, you know, Facebook got to blame Iran, which, you know, critical services like WhatsApp, Facebook inside of Iran, you could argue that's the reason. I don't know if Roblox can blame Iran or the war for why they missed so badly. Down 17 on Roblox. Atlassian up 18. I don't have their numbers yet. Twilio, they beat by 18%, 150 versus 127 on EPS. They beat on revenue by 5%. Twilio up 14. Twilio, NVIDIA's dumping after hours. I don't know why. Twilio's up 15. Atlassian's up 18. Reddit's up 5. Zeta's trying to hold it. So is Reddit. It's not convincingly holding it, but it's trying. Sandisk down 7. Western down 4. First Solar up 2. Apple's in about 10 minutes. And we'll see what happens. Let me try to get some more on Zeta's guide, which I think is relatively bullish. EPS also, Zeta, 13 cents versus 11 cents. So they beat on EPS by 18%. They beat on revenue by 7%. EPS is up 44% year over year. Revenue's up 50. And it looks like the guide is rather decent, but you're not getting a big pop. You're just not. 19th quarter in a row of pure execution. Okay, here it is. So 66 million in adjusted EBITDA, 42 million in free cash flow. That's up 48% year over year. AMD up, NVIDIA down after hours. 63% free cash flow conversion, 189 customers, up 19%. And then ARPU's at 1.7 million. They're increasing their guidance by 30 million, increasing EBITDA by 6 million, increasing free cash flow by 4 million. Second quarter, they're increasing revenue by 4 million, 36% year over year. They're probably going to beat that number. Adjusted EBITDA, they're raising by 2 million. They're going to grow that by 47%. I mean, you talk about a company that just is able to freaking grow and beat every expectation, even the highest ones they put out for themselves. That's what they're doing. And you're seeing some love right there. Here is the update on Sandisk.
Let's got the numbers. Christina.
A substantial beat for this memory maker. They make specifically NAND memory, so that's memory that is stored once your electronics are closed down. The EPS for Q3 came in at $23.41. The street was anticipating $14.54. Revenue also beat. The margins were really impressive. Q3 margins coming in at 78.4%. That's higher than NVIDIA's margins. And then for their guide, also a beat. There was the midpoint, or the range was $30 to $33 a share. EPS guide was the estimates were at 22. So you can really see substantial beat, and yet look at shares dropping over 6%. Could be because the stock has run up 73% this month. In the earnings report, the company talking about an inflection point for the company, and that they've signed these multi-year agreements, which a lot of memory makers are saying that there's, customers need memory so badly they're willing to sign on for more than 1-2 years. Melissa?
All right, Christina, thank you.
I mean, yeah, Sandisk up 70% in a month. it's a little much. So can anyone be that upset? Down 7% right here. Obviously, if you bought it today, you're a little annoyed. But, the question is it cheap at 160 billion market cap? I honestly don't know. I've not done enough valuation work on Sandisk to say it's super cheap. But the growth is absolutely incredible. Atlassian up 24%. This is interesting because this is, how much is it down year to date? Like, this was one of those names that got wrecked in the software sell-off. It was down 55 going into the print. It's up 24. So it's basically up 30 net, down 30 net for the year. Revenue is up 32% year over year. EPS is up 80%. They beat pretty nicely on EPS, almost by 40 cents. Cloud is up 29%. Data center. They have data center revenue in Atlassian? Why do they have data center revenue? Is this the same company? Hold on. These are Jira tickets, right? Why do they have data center? Wait, someone tell me what's going on. Why? When did Atlassian become a data center play? But the revenue growth at 30% is enough. I mean, the stock also, was it going to go lower than 55% down year to date? Maybe not. So maybe that's why it's finally getting some love. Agents sending Jira tickets now. Yeah, we got to look into that. When did Atlassian get data center revenue? Every company just needs to figure out how they're intertwined with data centers some way. Zeta needs to do marketing for data centers. Meta needs to do something other than spend money on data centers so the street could like them. Zeta, 6% here. Getting some love. Reddit lost all of it. Oh, Reddit lost all of it. It's holding on to like $2. It was up 8%. Went up to 160, right back to 150. Usually Reddit on the call actually ends up doing well for the past couple quarters. Steve Huffman finds a way to pump it. So maybe that's the reason. It's on-prem. Okay, that makes a lot more sense. The on-prem. So I mean, NVIDIA and Palantir's entire partnership was based on on-prem solutions for customers when it comes to AI. So that actually could be a really easy way for them to have a data center narrative. Wow, Zeta 7. Can we break 20? This thing deserves it. It's less than a $5 billion company. Does not deserve to be trading at these levels after 19 quarters of beating and raising. There's so many dog shit companies in the stock market that forget beating and raising. They can't even grow and they're catching a bid. Like, it is time for the street to give this a little bit of love right here. 1978. Let's see. Salesforce also up 2. Adobe, maybe that's up based on some of the software names. Adobe's also up 2. How about ServiceNow? That's up 2. What about Palantir? That's up half. So you're getting IGV getting a little bit of a pump. Is that all because of Atlassian? That's not because of Twilio. Or is there a software headline? That might be Atlassian. Or maybe Zeta, which is not an IGV, but maybe Zeta's helping. Yeah, I mean, Zeta's so small that's not even considered in the software space, but maybe Zeta right there. 1967. Reddit's back up 3. Apple, we got in 12 minutes, folks. We got 12 minutes for Apple. It's Atlassian. Did Atlassian report this type of data center stuff last quarter, or is this new? I feel like this is new. Otherwise, it wouldn't be down 55% this year. The momentum across our 3 strategic priorities of enterprise, AI, and the system of work continues to build. And I'm excited about the significant opportunity we have to scale profitable growth. Cloud revenue accelerate to 29%. Maybe also the cloud business, Google Cloud, Amazon, Microsoft. Those are something the street really loves. So maybe that's the reason. You're pronouncing Atlassian wrong. How do you pronounce it? How would you pronounce this? It's Atlassian. Like, how could I possibly be freaking saying Atlassian wrong? Palo Alto to acquire Portkey to secure the rise of AI agents. Deal expected to close in Q4 fiscal 2026. Okay, Palo Alto. This is like the 4th acquisition they made in a year. Palo Alto, that's a 0.6. Atlassian? Okay. Atlassian sounds more normal than Atlassian. Atlassian? I last seen him? Like, what are we talking about? Let me say it the way I want to say it. That sounds more reasonable, okay? Let me just repronounce words the way they're meant to be pronounced, not the way our English language dictators force us to pronounce them. Western Digital down 7. Down 7. Dude, Sandisk really getting hit right here. Also down 7. All right, so are we listening to Zeta? Which one are we listening to? Which one are we listening to? Apple's at 5. When is Zeta? Zeta at 4:30? When is Zeta? I feel like we got, guys, I'm telling you, I know the people that want to listen. I wish I made a better case for this yesterday. Everyone hated Meta and we wanted to listen to Amazon. Meta tends to be a bit more boring, especially when Jassy has so many diversified parts of the business and Zucks sounds like he doesn't want to be there. Apple's going to be boring. I'm telling you, it's not going to be interesting. They're not going to answer any questions. They're not going to talk about Siri. They're not going to talk about the fold. They're always so secretive. Like, there's really nothing you're going to like there. Zeta, I think, might be a little bit more interesting. David Steinberg's a bit of a character. And then Reddit's cool, but I don't know if that's going to be that fun. Sandisk, I don't even know if that's going to be interesting because, stock's up a lot. They're just going to say memory is in high demand. But it's Cook's last one. Yeah, but again, Cook's not a character on earnings calls that, he's literally reading off a script. So I don't think we're going to get anything from Cook. Okay, Zeta. We're doing Zeta. Everyone wants Zeta. We'll do Zeta. Dude, Steinberg's an animal. Steinberg wants to win, and he's pissed that his stock doesn't get a multiple. If you've heard him on interviews, I think the last one he went after the trade desk, he was like, "We're coming for their lunch." Like let's just say Zeta's peers all trade at a price to EBITDA that is 3x more than their average, and they're growing faster than all of them, and they're profitable. So it is very concerning to see why the street just doesn't get any love on this. IGV getting a nice pump after hours, which is good, 1.5%. I don't think I need to do a poll. I see like a billion Zeta messages. I don't think I need to do a poll on this. Rivian's going to be boring. Apple's going to be boring. Tanner's doing Sandisk, if anyone wants to listen to Tanner on Sandisk. Roku's been stuck for years, getting a 10% pump, but Roku's not going to be fun. I feel like we do Zeta. We'll see what happens there. Adobe, that one's at 252. You don't want to do Apple, but your thumbnail is Tim Cook. No, we will discuss Apple's results, which are important. But I'm telling you, I've done Apple 3 times before. Every time you guys want to fall asleep. It is the most boring call that's out there. The Atlassian CEO is live. Let's see what they say, or Atlassian, however you say it. Let's see why this stock is getting a pump right here.
Do you think that the concerns about the SaaSpocalypse will be put to rest with this earnings report?
Well, look, I can't speak to the broader market concerns. I can tell you from Atlassian's point of view, we had an outstanding quarter as customers continue to increasingly move their business to the Atlassian platform in ever greater numbers, right? You can see that in the total revenues of 1.8 billion, up 32% year on year. Cloud revenue up 29% year on year to over 1.1 billion. And this quarter, we focused on the service collection, one of our businesses internally, because it passed $1 billion in ARR and keeps growing north of 30% year on year, alongside one of our biggest quarters ever for competitive wins. So I can't talk to broader market concerns. I can talk to our business and the incredible strength we had this quarter, which is a credit to everybody on the team around the world.
Okay, Atlassian getting the bid. So we're not going to be able to start Zeta immediately because Apple's at 4:30. So we're going to be late to Zeta because we got to cover Apple. So we'll probably be 5 minutes late, which is okay. Usually the first 5 minutes, there's nothing too crazy. But Apple in 7 minutes, we're going to see what we got. Is Nike moving after hours? No, that's flat. Why is IGV pumping is the question. If it's Atlassian, then that's fine. But I feel like there's a deeper story. I mean, Salesforce is up almost 3%. It doesn't move that much after hours. Neither does Adobe. Neither does ServiceNow, unless there's a reason. Is something happening with Anthropic? Look at that, 3% on ServiceNow. Yeah, I guess it's Atlassian. I guess that's the reason. Zeta, did we get 20? Oh, there you go, 10%. Thank you, Mr. Market. Thank you. Finally, for giving it. Remember, this stock was $24 in January, and at 24, it was still cheap, like dirt cheap. Got to $13 in the SaaSpocalypse on April 13th or April 14th. Let's see if we can hold 20. That would be very nice. Palantir pumping as well. Yep, Palantir, obviously part of IGV. Thank you, Palantir. 140. This thing was stuck below 140 all day for no reason. Wow. Look at ServiceNow, 4%. What is the software news? If it's Atlassian, that's fine. But if their on-prem and cloud business is not replicatable in ServiceNow or Salesforce, then I don't know why the market is drawing a correlation there. Like they're different businesses, but maybe it's generally pumping the IGV and that's helping IGV up 2%. Or is it Zeta? Is Zeta doing it? Zeta $20. Let's see if we can get to 21. Amit, stop yelling. You're right. I need to calm down. I'm gonna lose this freaking. Look at service now, dude. 5. So this is becoming a big retail stock. Lots of retail wants to see this thing get back to 100, and it should. It should. MongoDB is also up. This was a chart today that kind of highlights how undervalued software was. Look at software compared to semis at an all-time low. IGV over SMH. So obviously, if you're talking about calling a bottom in software, maybe not a top in semis, but at least a proportionate level of bottoming when it comes to software just being completely disregarded. Maybe that's also part of the reason we're seeing the pump. Zeta right there, 9.5. Twilio's also making a move. Sandisk only down 3.5 now. That's recovering a little bit. That's correct. Atlassian, 20%. Is Atlassian in the IGV? Hold on, let me pull it up. Is it in the top 10 holdings of it? Because that would explain it. No, it's not even top 10, dude. It's Palo Alto, CrowdStrike, Salesforce, AppLovin, Intuit, Synopsys, Adobe, Oracle, Microsoft, Palantir. That's not even top 10. But maybe that is still a signal that software is not dead. Reddit right there, 4.9. 4.9. Okay, we got 3 minutes on Apple. First of all, what did you guys say on the poll? And then we'll do Apple pump or dump. Also, put in the chat if you own Apple. I know a bunch of people have owned it for a while. So Sandisk was the majority of 40%. Wow. So 11% of people thought Reddit would do well. 27% say Apple. 40% say Sandisk. Obviously, Zeta's winning that right now. Well, Atlassian's technically winning, but Zeta out of those 4. So let's do Apple pump or dump. What do we think? I think it pumps. I think they're going to crush on iPhone. Now, maybe it's already pumped enough from 258 last week to 271. Maybe that was your pump and it's going to sell the news, which it's done many times. I think like the last few quarters before the one that we had last time when they reaccelerated, that's basically what happened. So I don't know. But I would think we get to, oh yeah, the Mac Mini, that's also a big tailwind. Granted, that was only in the month of March, really, when OpenClaw went viral, but still, maybe that helps them increase the guide for Q2. Twilio is up 14%. Twilio, for those that don't know, is the company, when you like are signing into something and it says, I'll send you a code, and then like you have to put in the 6 digits, Twilio is the company that usually handles the back end to send you that code. Even though when you press on your iPhone, the code, it then disappears. Like it's the most annoying thing ever. And then you just have to memorize the number and type it in. Like it actually is not that effective as of recently. But Twilio is that company. It looks like they're growing nicely. They beat EPS by 18%, 14% right there. Scamio. Let's see if Apple is scam Apple today. Let's see. Apple 285. Apple 285, maybe. It works well on Android. Well, Apple's got to figure it out because it's done it like a lot recently for me, and it's so annoying. Roku, also great earnings. Trump said on the Iran war, we already won, but I want to win by a bigger margin. Gotta love it. Gotta love it. GoDaddy, they lost revenue 2%. That's down. GoDaddy's up 2.7. This is also a software name. Getting a little bit of love. Revenue, they guided 1.28 to 1.3. Net income margin down 33%. ServiceNow pumping 5% as that continues to go green. Twilio up 14% now. Rivian also, they had a little bit of a hit on revenue, but that's up 0.5%. Okay, Timmy Apple. Timmy Apple, 30 seconds. 30 seconds. Timmy Apple. Oh, Apple's dumping already. Nope, it's pumping. No, it's dumping. No, now it's pumping. No, it's dumping. No, it's definitely dumping. No, it's pumping. Where the hell? This one doesn't know what to do. Apple, oh, it's dumping, I think. Down 1. Down 1. Let's see. Apple, what do we got? Beat by 4% on EPS. 201 versus 194. beat by 1% on revenue, 111 versus 109. Revenue, highest revenue growth in 5 years, 17% year over year. EPS up 22%. Street doesn't as of yet like it. Stock is down. Now, 1% is not crazy, but Apple doesn't tend to move even 3 or 4% on earnings. Let's see if we get it. Here's the coverage on Apple. It's a double beat. Can't be too upset, right? Double beat. We'll try to get the rest of the details soon. Double beat.
Dollar estimate. I spoke with CFO Kevin Perek a short time ago. He said that this is a record for the March quarter. Moving on to iPhone sales segment, that's actually a slight miss here at $56.9 billion versus the $57.2 billion estimate.
They missed on iPhones? Wow. Did not expect them to miss on iPhones. At least they beat on revenue, but they missed on iPhones. I think it was the first miss on iPhones in like almost a year.
This is its second revenue miss in 3 quarters. Moving on to services. CFO Perek telling me best quarter ever there, $30.98 billion versus the estimate of $30.39 billion. That is up 16% year over year. The Mac segment also coming in ahead of the street at $8.39 billion. That's a 6% boost year over year. iPad beating $6.9 billion versus $6.66 billion, really chalking that up to the M4 powered iPad Air. Perek really pointing to that as a bright spot for the iPad segment. And we've got that wearables, home, and accessories segment coming in at $7.9 billion, up 5% year over year. Now, I want to point to some comments that we got from CEO Tim Cook. He spoke to our Jim Cramer a short time ago. On China, he said he thinks the relationship between the governments is better today than it was last year. And so he thinks that that's a positive, but that the thing that has driven their business is that the product has really resonated with the customer. Tim Cook, also weighing in on the Mac, said that they couldn't be happier with the enthusiasm that they've seen for the most advanced Mac lineup in the company's history. Huge excitement for MacBook Neo, a product that has been championed by John Ternus, the incoming CEO. He said, Cook adding that huge excitement for the MacBook Neo, which really opens up the Mac experience to a whole new range of customers. On the Mac Mini, Cook saying that there is huge demand here, so much so that they couldn't fulfill it all. They had supply constraints during the quarter. They still have supply constraints, and they'll most likely have them for the next several months. So huge appetite there for that product. Last thing I will say on that Google partnership, because Gemini is powering this rebooted Siri, this new AI strategy for Apple. Tim Cook saying that the relationship with Google is going well and saying that they can't wait for WWDC, their big annual developers conference coming up in June. Guys, those shares down 0.5%.
Reversing market now, I guess, liking. I think the market was trying to figure out why they missed. We'll see if it ends up going red again. And if Timmy Apple is right that it's supply constraints, not demand, which makes sense. Like, I don't think the iPhone would be more about demand or Mac Mini would be about demand. It would be about supply issues, which are not good that they have supply constraints. But if you're going to sell it off, you'd rather have a supply issue than a demand issue. You might have a lot of people buying it back to get in there. They are issuing a increase by 4% to their divvy. We'll get to Zeta in 1 second. Authorizing 100 billion share buyback again. Once again, Timmy Apple, before he leaves, is going to make sure 100 billion goes into those buybacks. Remember, he's the executive that started buying back stock, not Steve Jobs. It was Tim Cook. That's what got Apple to really start moving back in 2014. China revenue, they beat by 2 billion. iPhone revenue, they missed for the second time in 3 quarters. 2Q rev, they beat. 2Q EPS, they beat. They raised their dividend to 27 cents. They approved the $100 billion buyback. The stock basically flat. Basically flat. Okay, that's what we got from Apple. Micron getting a little bit of a dump, down 2%. Sandisk still not recovering, down 5%. Western Digital, that is also still down 6%. So the winners of this earnings are Atlassian up 14. It was up 30. So that one just fell by quite a bit, but still up a decent amount. First Solar's up 1. Reddit's up 7. Zeta's up 9. Apple's flat. Western and Sandisk are down. That's taken Micron down, Dexcom down 6, Amgen down 1, and then Roblox down 17 on the day. You got Apple pumping a little bit, and then Zeta up 9. Okay, I think we go to the Zeta call. Apple's not going to be starting until 5. By the way, I think once Zeta's done, we can go straight to Apple, and we'll get the Q&A from Apple. So at least we'll get some Q&A. But yeah, let's get into Zeta, see what we got. I'll give you a lot of updates in the chat for all these other numbers that we have. We'll see what the other CEOs say, but here's Zeta, and we'll keep up with the other companies as we get into it.
With a 4-year revenue CAGR of 30% reflect more than just consistency. They are evidence of sustained demand in a market consolidating around platforms that can deliver measurable outcomes at scale. And that visibility is reflected in our outlook. After raising the midpoint of our range for 2026 revenue guidance last quarter by $25 million, we are again raising it by $30 million, representing growth of 37%. These market share gains are evidence of a shift in the competitive landscape as AI moves from feature to a new way of doing business. Athena is designed to accelerate our share gains by bringing intelligence directly into workflows, turning answers into actions, and ultimately changing how marketing is planned, executed, and optimized. Athena is currently available to all of our enterprise customers, and its impact is already evident in sales pursuits and results. The number of Athena demos to potential new clients increased dramatically throughout the quarter. The promise of Athena is influencing decision makers and helping Zeta win deals as customers want to invest in applied AI, not roadmap AI. One new customer we closed in the quarter commented, "Leapfrogging to the future requires thinking differently today and committing to execution." Interacting with Athena made it clear that Zeta has already made this leap, bringing its vision to life and positioning us to accelerate into a fully agentic marketing future. End quote. Athena was a driver in one of the largest deals we have ever closed. The customer is a leading global apparel retailer operating across multiple brands, each with unique customers and over 3,000 locations worldwide. Zeta's platform was purpose-built to handle the complexity required by the largest enterprise companies, and this customer was able to consolidate down from 4 vendors to 1, Zeta. As the legacy marketing cloud replacement cycle begins to accelerate, this particular client was a marquee win. We are also seeing rapid adoption among existing customers. Early feedback and usage shows that customers view Athena not as incremental functionality, but as transformational technology. As adoption increases, Athena learns from more data. Outcomes improve and usage deepens, driving ARPU expansion and ultimately reinforcing the same flywheel that has powered our growth. That flywheel is powered by more than just Zeta's AI models. It's driven by the data and infrastructure behind them. Zeta's Supergraph, our proprietary identity and intelligence graph, unifies data across the enterprise and enables a complete deterministic view of the consumer that we believe is difficult to replicate at scale. This is translating directly into wins, where access to our data is a key driver for customer decisions. For example, our Supergraph was instrumental in a win with a leading online retailer of pet products in the United States that serves millions of active customers with a highly personalized e-commerce experience, a broad assortment of over 100,000 products, and a rapidly expanding ecosystem that includes auto ship subscriptions, pharmacy services, and pet health offerings. In addition, our proprietary data and the intelligence it generates was a key component in the expansion of a Fortune 100 telco client, expected to drive an 18 times increase in spend with Zeta in 2026 versus 2025. As Athena brings that intelligence to our customers in real time, the impact of this data advantage only grows. This foundation of data plus AI continues to power One Zeta. We are consistently seeing that the land, expand, extend model takes hold as customers begin with a single use case and scale across the platform over time. That expansion is driven by the modern CMO mandate: do more with fewer partners, improve ROI, and simplify execution across the organization. The result is larger commitments, deeper adoption, and a growing role for Zeta as the marketing operating system and core infrastructure. That momentum is showing up in the data. Super scaled customer ARPU was up 21% year over year, well ahead of our target range. Net retention rate remained above our target range of 110 to 115%. And the number of super scaled customers using more than one use case was up over 50% year over year at scale. It also creates a reinforcing cycle. Consolidation drives adoption.
Apple getting hit after hours now. Reddit's the one pumping 10%. We'll get back to Zeta in a second, but just one quick update right here on Apple again.
Of guidance range, Greater China coming in at 20.5 billion. That is 28% up from the year ago quarter. Cash on hand hitting 146.6 billion. And then we're also getting info on the cash dividend, Apple increasing that by 4% to 27 cents per share. And finally, the company authorizing an additional $100 billion share buyback, just like they did last year. That brings it up to roughly $500 billion over the last 5 years, a big part of why we've seen that share price go up. Shares now, trading roughly flat. Mel?
Okay, look, guys, I'm open to listening to anything. We can go back to Reddit. We can go to Zeta. Zeta call is kind of boring, not going to lie. Apple's call also probably boring. There's no way I can win when it comes to this because some people will hate it, some people will love it, but it's up to you guys. Like, you guys got to tell me which one do we really want to listen to. I think when Zeta gets the Q&A, it'll be more interesting. I don't know. Do I actually do a poll on this one? Because before you guys were decisively Zeta, now you guys are decisively not Zeta. All right, I'm doing a poll. Reddit or Zeta? Or Apple. Let's throw Apple in there. And if you guys want Apple and we have to sit through a boring Apple call, then it's on you guys. It's not me. It's not me. But not every call can be like Palantir or Robinhood, which are exciting. Do we just flip between a bunch of them? The majority of you still say Zeta. Or a majority of you still want, all right, I'm going to go back to Zeta. Maybe we'll flip through it, but going back to that.
Stretch goals, coming in 26 million or 7 points above the midpoint of our revenue guidance for the quarter. As I analyzed the strength of our quarter, what stood out was how balanced the upside contribution was. It was not one or two isolated benefits. Instead, in baseball parlance, it was a lot of singles and doubles, which in my opinion is healthier.
Okay, let's go to Reddit. Let's see what's going on with Reddit.
Are now using Reddit Pro. Overall, there's a lot to be excited about this year. And every day we see more businesses coming to Reddit.
Bro, Reddit's boring too. these are all horrible. I'm not going to lie. And I like Zeta, but I'm sorry. The beginning is also pretty boring. Until we get to Q&A, it's all pretty boring.
And high intent keep us exceptionally well positioned. Thank you for joining us and for your continued support. Now I'll turn the call over to Drew.
Thank you, Jen, and good afternoon, everyone. The financial headline for
this is just going to be him reading. This is a CFO. He's going to be reading off a PowerPoint, all the financials.
Way. Reddit continues to scale quickly, generating cash flow and profitability results that few companies.
All right, let's go back to Zeta.
Income statement and balance sheet.
Oh, hell no, bro.
Super.
No. Income statement and balance sheet. Why are these calls so bad? Can they please be a little better? Let's see how Tanner's doing.
Quarter, we generated $2,955 million in adjusted free cash flow, which represents an 49.7% margin.
Dude, Sandisk is, I mean, that's not that much better, guys. We're stuck between a rock and a hard place here.
$1 million from net cash capital spending.
Look at Tanner trying to
Gross capital
act like it's
expenditures
interesting.
totaled $240 million and represented 4% of revenue. Our capital plan is designed to balance growth of
Okay, let's go back to Zeta.
40% year over year. Both are great examples of the One Zeta sales motion working and how Athena can unlock more of the platform's capabilities for our customers to use. The forward-looking sales pipeline is also robust, going into a season when Athena will be front and center at multiple.
Okay, let's go to Reddit.
Up 15% year over year. U.S. revenues were up 67%. International revenue.
Okay, I'm just gonna talk. This is disgusting. This is so bad, bro. This is so bad. I feel like we should just try to analyze what's going on. Reddit right there, 162. I mean, come on, bro. Like, you can't even blame me here. Like, either I let you guys sit through the boringness of Reddit or Zeta. I didn't, honestly, I've never listened to a Zeta call from the beginning like that. I usually, go in for a little bit of Q&A and stuff, but I haven't like actually sat and like listened to it from the beginning. That was bad. I'm sorry. That was bad. Now, it's not really their fault. All these calls are kind of boring, but this is how Mitt watches movies 100%. But this is not like Meta or Google or anything like that. Do we just do Apple then? Apple's also going to be boring, but at least it's freaking Apple, I guess, at this point. I want to hear the Q&A too. The problem is they all coincide with each other. Maybe we'll get back to Zeta on the Q&A. Yeah, that's bad, dude. I can't put you guys through that. If anyone really wants to listen to Zeta, I think Sam is streaming. If you really, really want to listen to Zeta, I'll just link Sam's stream and you can just sit there and listen to it. Every call you've had this week has been like that. Well, no, the big tech companies are still, Meta was a little boring. Well, that's Zuck's fault, but it was still a good stream or a good, it was important to listen to it. Steve is in New York right now. Steve is not going to be able to come into the stream yet. I am doing a podcast with him tonight though. So he is very angry about Meta. Like he called me in the middle of the day. He is pissed about Meta at these levels. Pounds are up 0.6. Zeta's up 6. What was I going to say? Where's IGV? IGV at 85. That's up 1.4. Dude, Chris was going to come on today, but then we had earnings. So I told him to come on Friday, but I didn't know the earnings would be this bad in terms of like listening to them. It's so bad. Like I know Tanner's just, there's no way Tanner's enjoying any of this right now. There's no way. He's got to be so bored. But Sandisk is Sandisk.
It's effective immediately with no expiration date. With that, I'll turn the call back to David for closing remarks.
Thank you, Luis. In summary, we continue to execute with.
Yeah, there's nothing there. Okay, so this one are still down. We were going to do Macro Thursday, but then we have earnings, so we'll have Chris on tomorrow instead. Nebius is not today. Nebius is not today. Let's see if Zeta's doing Q&A yet.
Net income and EPS positive for the full year of 2026, specifically generating between 2 and 4 cents of GAAP earnings per share.
This is so bad. How about Reddit?
Repurchase activity. Although share repurchase activity was modest in the quarter, about 35,000 shares and about 995 million.
Yeah, it's so bad. It sucks. I'm sorry. It's just these are unlistenable. These are unlistenable. Apple, we'll have Apple in about 10 minutes. We'll just stick to Apple and we'll just listen to that. Apple getting hit by about 0.42. Let's get some analysis on why Apple's getting sold off right here, even though it doesn't feel like they deserve to be getting sold off.
For memory inflation to affect Apple. I am encouraged by the performance in the March quarter. And I think the $100 billion in repurchase is a reminder. I think sometimes that $350 billion to $4 trillion move by Tim Cook, too much credit's given to buybacks.
Revenues up 16%, product revenues up 15%. I think iPhone was basically in line. I'm good with that. The real positive call outs, services. Services is 25% of their revenues, and it carries much higher gross margins, which is one of the reasons why I think gross margins beat expectations. And really pleased that they didn't get hit on the gross margin line because of the memory prices that everyone has been concerned about. We'll have to see what they say about guidance in terms of gross margins next quarter. Here's the thing. I got out of Apple because they did not have AI in their latest phone last year. And I didn't think you were going to see a super cycle. We had a great cycle, even though we didn't have AI in the phone. So if they can talk about at WWDC about AI and they can execute on that, the stock's a buy, in my opinion. So I'm going to keep a close eye on it. Problem is, it's at 31 times earnings, and I want it a little bit cheaper. But if they have a better phone with AI incorporated in it, I think that you will get a super cycle.
Yeah, it's interesting.
Or the foldable phone creating the super cycle, but as of now, you're not really seeing that in the revenues. Apple, they're 270. Really nothing you're getting from Apple in terms of its stock price reaction right there. 270.10. Zeta's given up a lot of the pump, unfortunately. I don't know what these guys have to do to get this stock to move. Reddit, at least they did put up massive growth, so 11% right there seems deserving. Up 17 or up 12%. Apple will need their earnings call to pump. That's correct. They do tend to give a little bit of guidance 15 minutes in, so maybe that'll happen. But the software names are not getting as much love. Palantir and Hood aren't that exciting either, but at least we have a video, right? Like, yeah, maybe the calls aren't that exciting. I would say Palantir is more exciting than Robinhood, but we get to see something. Here, I just feel like it is just unbelievably boring. I mean, at least Reddit's going up. So got 8 minutes until Apple. Let's just go to Reddit, see if they get into Q&A and see what we got here.
And a leader in cash flow margin. We're off to a strong financial start in 2026. Reddit's raw materials position us well for growth, and our advantage financial model is turning top-line gains into meaningful increases in cash and profitability. That concludes my comments, so let me turn the call back over to the operator.
Thank you. We will now begin the question and answer session. If you would like to ask a question, please press *1 on your telephone keypad to raise your hand and join the queue. And if you'd like to withdraw that question, again, press *1. We kindly ask that you limit yourself to one question. For any additional questions, please re-queue. And your first question comes from Doug Anmuth with JP Morgan. Please go ahead.
Thanks so much for taking the questions. One for Steve and one for Jen. Steve, can you just talk about the work you have to do on the user side to increase frequency and accelerate growth, and what you think will be most impactful over the next several quarters? And then Jen, on DPAs, you announced a number of shopping tools to enhance DPAs. Can you just help us understand how you're thinking about current adoption and the progress you're seeing with that format? Thanks.
Sure. Thanks, Doug. Okay, on the user side, we've seen some progress in the quarter that we're happy with, improvements in onboarding. We had a couple experiments do well, ramped up to 100%, some contribution from feeds as well. I think as we look over the rest of the year, the biggest drivers will probably be performance. So just the kind of pure speed of both iOS and Android. I still think there's a lot to do on onboarding. And I think the biggest driver long-term will be the feed. And so hence the kind of focus on ML talent for us right now. So I think all of this is in alignment with what we've talked about for a long time, which is make the core product work better. I will say over there, we've seen nice progress on search as well, which is itself a driver. Search WAUQs are up 30% year over year. So I think solid progress there as well. The big picture story here is we've been really focused on the team, the processes, the tech, upgrading all of those things over the last year. So I feel the foundation is better than what we've seen in the past to achieve these outcomes.
I think the second one on DPA. Look, we launched DPA a year ago, and this is, in the world of ads, I'd say shopping is probably one of the more complicated products, and obviously folks have been offering DPA for longer than we have. So there's a lot of headroom there to, I think, improve our models and, the onboarding process, et cetera. But I think the team has done a really good job in giving, I think, great ROAS improvements to our customers. With the Shopify and WooCommerce partnerships, I think that's an opportunity for us to acquire more sort of mid-market and SMB customers into DPA. So we're excited about that. Again, very early.
Okay, I'm trying to go to Zeta's Q&A, but their website isn't loading anymore. Reddit Q&A obviously is pretty boring. Zeta on the events, webcast. Reddit's fading the pump a little bit. Yeah, guys, it's not working. Here it is. There's no audio. I don't know why, but there's no audio. Reddit loses 160. Oh man, that was up almost 14. Now it's up 8. I don't know. We don't see it. I don't know why. We can stream Sam to get some of the audio here at least. Let's see if this works.
They brought
Ladies
in
and
the...
gentlemen, thank you for standing by.
Oh, there we are. Oh, there we go.
Hold on just 1 second, please.
Oh, it wasn't. Okay, it was their fault. It wasn't my fault. It was their fault. Okay, we're back.
That your line is in the question queue. You may press star 2 if you'd like to remove a question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions.
Okay, so everyone's stream didn't have the audio there.
And the first question comes from the line of DJ Hines with Canaccord Genuity. Please proceed with your question.
Hey guys, congrats on a fantastic quarter. Nice start to the year. David, I want to ask you a competitive question. So obviously there's been more public backlash against the trade desk and the agency ecosystem, but I think for those living in the marketing and ad tech world, like that's been going on for a while now, right? So related questions here. Number one, like how much do you think Zeta has benefited from that dynamic? And then second, if the trade desk figures out how to get pricing right, or at least make it more transparent, does this rebalance competitive dynamics at all, or is the horse already out of the barn there?
Well, first of all, DJ, thank you. I appreciate it. Could not be happier with this quarter. And I think it really speaks to kicking off the year right. And Athena really was a massive driver here. I want to separate the conversation about the agency and other technological platforms like the trade desk that are out there and struggling a bit, because the agencies continue to thrive and they're not really having any issues from our vantage point. And I just got back from 3 days at the Possible Conference where I did 54 meetings in 3 days, hosted 4 dinners and 3 cocktail parties, which is why I'm losing my voice going into this. I think that, and I don't want to speak to any particular platform, but I think the horse is out of the barn. I think that organizations that have built workflow management tools that do not have proprietary data, they do not have proprietary native artificial intelligence, are going to really struggle in this next evolution of where sort of marketing is going as it relates to intelligence. Because if you're not creating intelligence in today's world, you're not winning. And I think that we are a direct reason that a number of our competitors are either growing slower or shrinking as we take meaningful market share. Chris, in his prepared remarks, was very clear about the fact we had a number of meaningful agency wins in the quarter that will continue to run out through the rest of this year and into future years that are starting with social. We're starting to see those move over to programmatic and connected TV as well. So I think if you separate the agencies, which are doing well and thriving, from the technological platforms that have based their business on workflow management, I think they are going to struggle and we are going to continue to beat them handedly in the marketplace.
Yep, perfect and helpful color. Chris, I want to follow up with you. So David gave a bunch of great anecdotal data points around Athena and the early success there. The product's not explicitly monetized, right? So what are the signs that we all as investors should be paying attention to from a financial perspective that will signal to us that Athena is moving the needle for Zeta?
Great question, DJ. I'm glad you asked. There's a couple of leading indicator data points that I think you can already begin to look at. So as part of the press release, one of the data points that was called out was a 7x increase. And this is just in the first week of Athena's general availability. We saw a 7x increase in the amount of agentic interaction.
Okay, do I switch to Apple? Apple's gonna be boring too, but do I switch? Do I switch? Give me a yes or no in the chat. If you want Zeta, I got another live stream for you. Do we switch to Timmy Apple? Last Apple call for Tim Cook. Again, there's another stream with Zeta if you really want Zeta. So I can give it. Okay, I see more yeses. The calls today are just bad, guys. I'm sorry. They're not bad. It's just there's no consensus over which one to live. It's just one of those days. There's not enough consensus. And so it's leaving me in an awkward space because I don't want people to be upset, but it is what it is. All right, Apple. We're going to Apple.
From analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook. These statements involve risks and uncertainties that may cause actual results or trends to differ materially from our forecast, including risks related to the potential impact to the company's business and results of operations from macroeconomic.
I don't want to see a single comment saying Apple's boring because we know it's going to be boring. But we are paying our respects to Timmy Apple, okay? That's how we settle all of the confusion for today's stream. We are paying our respects to Timmy Apple, and that's why we're listening to it. Zeta was boring, Reddit's boring, Apple's going to be boring. When the Apple CFO starts talking, it's going to be really boring. But that's why we're listening to Timmy Apple.
To be filed tomorrow, and in other reports and filings we make with the SEC. Apple assumes no obligation to update any forward-looking statements, which speak only as of the date they are made. I'd now like to turn the call over to Tim for introductory remarks.
Thank you, Suhasini. Good afternoon, everyone, and thanks for joining the call. Before we get into the quarter, I wanted to take a moment to talk about the transition we recently announced. I just celebrated my 28th anniversary of being here at Apple. 15 years as CEO. In fact, this will be my 89th earnings call. I'll always be proud of the impact Apple has had on our users' lives, and I can't begin to express how grateful I am for our amazing teams. It's because of them that there is no company like Apple, and I truly believe there never will be. This moment for the transition is the right one for a number of reasons. First, our business has been performing extremely well. The first half of this year was very strong, growing double digits year over year. Second, our roadmap is incredible. And most importantly, we have the right leader ready to step into the role. As I have said, there's no one on this planet I trust more to lead Apple into the future than John Ternus. John is a brilliant engineer, a deep thinker, a person of remarkable character, and a born leader. I know he will push us to go further than we think is possible in order to deliver the greatest products and services for our users. I have been so proud to call him a colleague and a friend, and I will be even more proud to call him Apple's CEO. Over the coming months, John and I will be working closely together to make sure this transition is perfectly smooth. I very much look forward to stepping into the role of Executive Chairman on September 1st. As I've told John, I will be here to support him in any way he needs and in any way I can. I am incredibly optimistic about Apple's future, and I know we have the right team in place to deliver on the promise of this company. I also want to take just a moment to share my profound gratitude for our shareholders, especially our long-term shareholders, for believing in Apple and for your support over the years. It means a great deal to all of us. With that, I'd like to bring John on the call for a moment to say a few words. John?
Thanks, Tim, and thanks to everyone on the call.
In my view, Tim is one of the greatest business leaders of all time. Stepping into the role of CEO is an incredible honor, and it means a great deal to me to have Tim's trust and confidence. I want to echo Tim's sentiment about our shareholders, especially those who have been with us for many years. Thank you so much for your confidence in our company. As you know, one of the hallmarks of Tim's tenure has been a deep thoughtfulness, deliberateness, and discipline when it comes to the financial decision-making of the company. And I want you to know that is something Kevin and I intend to continue when I transition into the role in September. This is an especially exciting moment for Apple. As Tim mentioned, we have an incredible roadmap ahead. And while you're not going to get me to talk about the details of that roadmap, suffice it to say, this is the most exciting time in my 25-year career at Apple to be building products and services. There are so many opportunities before us, and I couldn't be more optimistic about what's to come. For now, let me simply say I am deeply grateful to Tim, to the executive team, and to everyone at Apple, and I look forward to all of the important work ahead. And with that, let me turn it back over to Tim.
Thanks, John. Now let me turn to the quarter. Today, Apple is proud to report $111.2 billion in revenue, up 17% from a year ago, and a March quarter record, which was above the high end of our guidance range despite supply constraints. Customer enthusiasm for iPhone has been extraordinary, with revenue growing 22% year over year to achieve a March quarter record. Services reached an all-time revenue record, growing 16% from a year ago, while EPS set a March quarter record of $2.01, up 22% year over year. We set March quarter revenue records and grew double digits in every geographic segment, including strong double-digit growth in Greater China and the rest of Asia Pacific. We also achieved March quarter revenue records in both developed and emerging markets and saw double-digit growth in nearly every emerging market we track, including India. We recently marked Apple's 50th anniversary with celebrations in our retail stores and with users around the world. It was a special moment for us to reflect on the incredible journey we've shared with our users, to thank everyone who's been a part of it, and to look forward to writing the next chapter in our story of innovation. We have always believed that people who think different can change the world, and we have been proud to build tools and technologies that allow them to do just that. In March, we put an amazing showcase of human creativity and ingenuity in action with updates across iPhone, iPad, and Mac. Through an unforgettable week of innovation, we also unveiled MacBook Neo, giving us an opportunity to bring the power of Mac to more people than ever before. I'll have more to say on that and all the incredible things we delivered for our customers over the last few months. Now let's take a closer look at results from across our product line, beginning with iPhone. As I mentioned earlier, iPhone had an excellent quarter with $57 billion in revenue, a March quarter record despite supply constraints. During the quarter, we welcomed iPhone 17e, the newest addition to what is already the strongest iPhone lineup we've ever had. It brings outstanding performance and core iPhone experiences at a remarkable value for everyone from enterprise teams to consumers. Across the lineup, this is the most powerful, capable, and versatile iPhone family we've ever created. That starts with the latest in Apple Silicon for iPhone, A19 and A19 Pro, which include neural accelerators in the GPU to deliver a huge boost to AI performance. With incredible performance and battery life and deep integration of Apple Intelligence, iPhone continues to set the standard for what a smartphone can be. Customers are capturing stunning photos and videos with our most advanced camera system ever on iPhone 17 Pro and Pro Max, including an 8x optical quality zoom and the all-new center stage front camera, unlocking entirely new ways to frame, create, and share their moments. In fact, during their recent mission, Artemis II astronauts captured some truly otherworldly images of Earth and space using iPhone 17 Pro Max. Meanwhile, iPhone Air users are tapping into the pro-level performance in our slimmest iPhone ever. And with iPhone 17, we're seeing a strong response, not only from customers upgrading from previous generations, but also from people choosing iPhone for the very first time. We've been enormously pleased with how the entire lineup has been received. In fact, the iPhone 17 family is now the most popular lineup in our history when looking at the launch through the March quarter. And according to IDC, we gained market share during the quarter. Mac revenue was $8.4 billion for the March quarter, up 6% from a year ago, despite supply constraints driven by higher than expected levels of demand. We're delighted with the reception of what is the most advanced Mac lineup in our history. We set March quarter records for upgraders and customers new to Mac. And according to IDC, we gained market share in the quarter. From Mac Mini to MacBook Pro and everything in between, Mac is the best platform for AI, with Apple Silicon delivering exceptional performance, industry-leading efficiency, and the ability to run advanced models locally in ways that simply weren't possible before. It's so exciting to see how strongly users are embracing Mac for these capabilities. There's tremendous enthusiasm for MacBook Neo, which made its debut during the March quarter, opening up an entirely new way to experience Mac at a breakthrough price. We've also further improved MacBook Air, already the world's most popular laptop, with M5, making everyday tasks faster and more responsive than ever. MacBook Pro reaches new heights with M5 Pro and M5 Max, delivering extraordinary performance and dramatically advancing what users can do with AI on a portable system. And for desktop users, Studio Display pairs beautifully with Mac, while the all-new Studio Display XDR takes things even further, bringing unmatched image quality and an extraordinarily immersive experience to pro workflows. Turning to iPad, revenue was $6.9 billion, up 8% from a year ago. iPad continues to be a great choice for students, small business owners, artists, and so many others because it empowers entirely new ways to work, learn, create, and connect. It's not just about mobility. It's about versatility, delivering a uniquely flexible experience that adapts to whatever users want to accomplish. Today, our iPad lineup is stronger than ever, led by the arrival of the M4-powered iPad Air. With a remarkable leap in performance, it raises the bar for what users can do on iPad, from advanced creative workflows to powerful productivity and immersive learning. And with the addition of our latest Apple Silicon, along with the N1 wireless networking chip and C1X modem, users can stay seamlessly connected wherever they are. Across wearables, home, and accessories, revenue for the March quarter came in at $7.9 billion, up 5% from a year ago. Apple Watch Ultra 3, Apple Watch Series 11, and Apple Watch SE continue to play an essential role in users' lives, going far beyond fitness tracking to deliver meaningful insights and support for their health and well-being. From helping users stay active and reach their fitness goals to delivering powerful, science-backed health insights that can prompt meaningful conversations with care providers, Apple Watch is with them every step of the way. It's tremendously meaningful to see how Apple Watch continues to empower users to better understand their health, make more informed decisions, and in many cases change and even save lives. During the quarter, we introduced customers to a new level of audio experience with AirPods Max 2, delivering stunning sound quality and our most advanced active noise cancellation yet. At the same time, AirPods Pro 3 combine an incredibly immersive listening experience with intelligent features that adapt to how users move, train, and live. And whether it's a call across town or a conversation across continents, AirPods make it effortless to stay connected. AirPods make it effortless to stay connected. AirPods can bridge languages too, thanks to live translation powered by Apple Intelligence. In addition to live translation, Apple Intelligence brings together dozens of powerful capabilities, from visual intelligence to cleanup in photos, that are seamlessly integrated into the moments that matter most to our users every day. And we look forward to bringing a more personalized Siri to users coming this year. What truly sets Apple apart is how Apple Intelligence is woven into the core of our platforms, powered by Apple Silicon and designed from the ground up to deliver intelligence that is fast, personal, and private. This is not AI as a standalone feature, but AI as an essential, intuitive part of the experience across our devices. It builds on years of innovation, from the neural engine to advanced on-device processing, enabling capabilities that are not only incredibly powerful, but also respectful of user privacy. Increasingly, that same foundation is drawing developers and researchers to our products as powerful platforms for building and running agentic AI, thanks to the unique combination of performance, efficiency, and on-device capabilities. When you combine this level of integration with our relentless focus on the customer experience, it becomes clear why Apple platforms are the best place to experience AI. Now let's turn to services, which set an all-time revenue record with $31 billion. We saw double-digit growth in both developed and emerging markets and set new all-time revenue records across most of the services categories. There's no better place to find celebrated storytellers than Apple TV. Audiences are applauding the return of shows like Your Friends and Neighbors, Shrinking, and For All Mankind, while discovering new favorites like Widow's Bay. Apple TV has also earned its place among the most decorated names in entertainment, with more than 800 wins and more than 3,400 nominations in the 6 years since launch. This is a great time for sports fans on Apple TV too. Formula One season kicked off in March, and Apple TV subscribers in the US have one of the best views of the track. The new MLS season is also well underway, and subscribers in more than 100 countries and regions can watch every match with no blackouts. And Friday Night Baseball returned for its 5th year on Apple TV with a full season of marquee matchups. In retail, we had a March quarter revenue record and saw very high levels of store traffic throughout the quarter. From New York to Chengdu to Paris, it was wonderful to see stores around the world at the center of Apple's 50th anniversary celebrations. We were also thrilled to open the doors to our 6th store in India. It has been wonderful to see how we've continued to grow in India in recent years, part of our larger efforts to connect with even more customers in emerging markets all over the world. At Apple, we believe powerful innovation and uncompromising quality can go hand in hand with sustainability. Over the last year, we've reached new milestones in the environment, including the use of recycled content in 30% of the materials in all of our products shipped in 2025, the most we've ever had. That includes the use of 100% recycled cobalt in all Apple-designed batteries and 100% recycled rare earth elements in all magnets. We've also achieved our goal of removing plastic from packaging, with every Apple product now shipping in fiber-based packaging. All of this is a testament to the
I don't know where the audio is, but that's not me. That's not me. I just had to use the bathroom. That's why I just went and came back. But that's Apple. The streaming audio feed is currently unavailable.
Sold worldwide. These include sensors that support key iPhone features like camera stabilization and integrated circuits essential for features like crash detection and activity tracking. These efforts build on the progress we've made in the American Manufacturing Program, including the work we're doing to advance an end-to-end silicon supply chain across the U.S. At TSMC's Arizona facility, for example, Apple is on track to purchase well over 100 million advanced chips. As we're accelerating our longstanding support for U.S. innovation, we're also investing in America's workforce. We're looking forward to opening the doors to an all-new advanced manufacturing center in Houston later this year, which will provide hands-on training led by Apple experts and tailor-made for students, supplier employees, and American businesses. Whether around the world or in our own backyard, we're proud of the difference Apple has made to enrich lives and support the communities we serve. Looking ahead, we're delighted to welcome developers back to Apple Park for WWDC 26. We can't wait to share what we've been working on, from AI advancements to exciting new software and developer tools. It's going to be an incredible week. As always, we remain in relentless pursuit of even more powerful innovations, guided by our North Star, our users. As we celebrated 50 years of Apple, we are even more excited and more optimistic about the next 50 years and beyond. With that, I'll turn it over to Kevin.
Thanks, Tim, and good afternoon, everyone. Our revenue of $111.2 billion was up 17% year.
All right, do we want to keep listening to the CFO? Yes or no? I told you guys this one would be boring. And boy, did it live up to what it's doing. I have to leave in about 20 minutes. I have a hard stop in 20. So we could just talk for 20. I don't think I've ever seen these many no's. There's like 3 Apple fanboys that are like, yes, we want to listen to the CFO. Repeat the numbers that we literally just heard on CNBC. Okay, I think the no's have it. We'll just talk for the next 20 minutes. If you really want the Apple call, again, if you got a lot of money in Apple, you have to listen to it. I will link it right now in the chat. You can just click this, easily listen to it from their website, although their audio stream cuts in and out sometimes. You can listen to that. All right, so we got 20 minutes. Let's talk about markets. Let's do it. You know what? We're going to have a schedule, guys, on these freaking earnings for the next couple of weeks because I am a man of the people. I don't want to disappoint the people. But we need consensus. So, for example, next Tuesday, AMD, obviously, that's going to win against MicroStrategy and SMCI and Big Bear. Like, I get it, 100%. Yeah, we should have done freaking Technical Tuesday or Technical Thursday on today. But the call just ended up being so boring. On Wednesday, ARM, AppLovin, Axon, Fortinet, Snapchat. I mean, is this even a day where we listen to a call? I feel like none of these are worth listening to. Then you have Rocket Lab, SoundHound, Iren, CoreWeave, Coin on Thursday, Trade Desk. Like, I know Iren people are going to go crazy, but the CoreWeave people are going to go crazy too. The Rocket Lab people are going to be even crazier. So maybe the easiest way to deal with this is unless there is like 95% consensus, like I know there will be for AMD, we just don't listen to a call. Even though then I know a bunch of people are going to say, why aren't we listening to Iran or something like that? But it is what it is, because otherwise everyone else is bored, and I'd rather at least talk about stuff that everyone can benefit from versus not. Yeah, maybe we'll have Jason on Thursday. Oh, yeah, because we definitely can't do. I know you guys will not let us do Technical Tuesday next week when AMD. There is no way in hell. There's no way on planet Earth you guys will let us do TT with AMD. Apple down 1.2%. So maybe we'll do it on Thursday, even though the Iren and CoreWeave people will be bad. I get it. But yeah, that's what we're going to have to do with consensus. All right. So 20 minutes. Let's talk about the market. Palantir's pumping after hours because software's pumping. I mean, thank Twilio and Atlassian for those results. Unfortunately, Zeta not really holding on to much of the pump. It's up 4, which is nice. It was up 10. Sandisk down a nasty 7, which can't be that surprising. The thing freaking went to the moon in the past month. Western Digital matching it, down 7. The risk to reward on Sandisk and Western Digital, I'm not the best trader in the world, but the risk to reward on both of these, it had to be more geared towards risk versus reward. Given Seagate already, if Seagate didn't report, I feel like they wouldn't have pumped it, but Seagate set the standard. The other names pumped with Seagate. And so I feel like, going short versus long into these two prints after they were up this much probably was just the easier, more logical bet. But then again, if they had pumped, people would have said, how could you go short these names? They're the most important names in the AI revolution. So these are down on the day. Micron also getting hit down about 2.2% after hours. Twilio up 17%. Big beat for them. And Atlassian, again, Atlassian was down 55% going into the print. So this was not some consensus, they're going to smash earnings or something. They really had to turn around the numbers this quarter to be able to get the street to give them this type of love. Still down 30% of the year, but at least it's getting some love. Obviously, Palantir will be on Monday. Grab will be multiple hours after Palantir. So directly at 5 p.m., we'll have Palantir. Hopefully both can give us a good quarter. Meta's looking to develop many new apps using AI. Zuckerberg said he was in the trajectory change in ad business. Look, here's the thing about Meta, and I believe it's unbelievably undervalued for the obviously earnings growth that they're putting up. But, we talked about this in January, and it is a thing that, once again, the street cares about. They didn't care about it last quarter when it pumped to 750, but I guess they care about it again. There's only one thing Meta's got going for it, which is advertising. Now, that alone should make this a $2.5 trillion company by any reasonable standard on valuation. But if Zucks keep spending on CapEx and the only thing they have going for it is ads, they don't have the juicy cloud business like AWS and GCP and Azure. And Meta could spin up a cloud business tomorrow. I feel like Meta could, they have excess compute. They probably could do it. But they're more spending than monetizing, even if the ads are monetizing, which again, 33% year-over-year growth, that justifies a much higher valuation on any objective standard when we're looking at the PE. But it's about perception. The perception is that Google is way more well-diversified. So is Amazon, obviously. Google has way better margins than Amazon, although Amazon's operating margins finally above 13%. Dude, it's been freaking 3.5 years before those margins even at 10%. They were at 5.7% back in 2022. So Amazon has more than doubled their operating margins. That again, that e-com business has always been a strain on the entire company, but AWS is finally breaking out from a margin perspective. So he announced Meta Cloud months ago, but he announced it in the context of Meta. I think it was called Meta Compute. It was in the context of their internal mission having enough compute to continue doing well. And I think the goal of him announcing that was to be able to get researchers to come to Meta because, he has unlimited compute. So researchers can do whatever they want and try a bunch of experiments because they have the compute resources. It was not to sell external compute, which is why Meta gave Nebius a $25 billion deal. They gave CoreWeave a $43 billion deal if you put both deals together, because they otherwise they would be selling the compute themselves, but they don't want to. And so unfortunately, Meta's not getting that type of love from the street. And although its valuation is mirroring Google to an extent from last year when Google was at 140, Google was obviously the better buy yesterday. Google was the one that was just the most diversified version of the business to put up the results that the street would appreciate. By the way, Meta got downgraded by like 10 firms this morning. I haven't seen that in a long time. Meta actually get downgraded. It's Meta at the end of the day. Street was like, yeah, 830 to 750, 900 to 790. I couldn't believe the amount of downgrades. Google got unilaterally upgraded basically to 430, 450 across the board. And that also explains why Google's getting the bid. Viva right there, 9%. They are in the S&P. They are in the S&P. Downgraded or lower price target, both. Now, they didn't get any sells. They got neutrals or holds from buys, but at least I didn't see any sells. But across the board, the street just took her down. Same thing with Robinhood, dude. Robinhood got a lot of downgrades. Again, didn't get sells, but they got a ton of downgrades from buys. This number on Meta was like 880 yesterday. Now it's at 826. And Google, Viva up 10% on getting into the S&P. Google's, look at that, 413. This thing was like 370 yesterday. What does Viva Systems even do? They're replacing Coterra Energy. What does Viva Systems do? Cloud-based software data analytics tailored for global life sciences industry. It helps companies manage clinical trials, regulate compliance, quality control, and commercial sales engagement. Does anyone own this? Viva? I mean, they were supposed to get in last time, but they missed it. How much market cap is this? 25 billion. It's going to be almost 30 billion tomorrow. Dude, why is Nvidia tanking today? This is just, it's been such a weird day, dude. First of all, my entire day has felt weird because I didn't do the show in the morning. Like, I've just been out of whack the whole day. So that made the day weird already, just waking up at weird times, everything like that. And then I wake up and like every pump from yesterday is gone. New pumps are happening, which I didn't know how to make sense of. And then you have Nvidia dumping 5%. After all of them said we're going to spend so much on CapEx, they heard Nvidia. Apple kind of going green a little bit. Druckenmiller owns Viva. Also, we're going to get 13Fs pretty soon. We haven't gotten a bunch yet. We have like 3 or 4 of them. So we will see what the big guys did in Q4. Yeah, I mean, this is part of the reason everyone talked about CPUs, custom silicon, NPUs, and memory. Now, granted, I still don't think that means you take NVIDIA down, but obviously it definitely means you give a bid to the names that I guess weren't considered part of this AI revolution. Or if they were, they weren't really getting a crazy bid like an AMD, and now that is. Apple getting a little bid right there. We can go back to the call and see if they're saying anything here that's causing this.
The mark to market of minority investments, and our tax rate to be around 17%. With that, Tim and I will take questions.
Okay, Q&A.
Thank you, Kevin. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Certainly. We'll go ahead and take our first question from Eric Woodring with Morgan Stanley. Please go ahead.
Great. Thank you very much for taking my questions, guys. And Tim, I'll save the congrats or the au revoir for next quarter. But it's been a pleasure working together. I would love maybe, Tim, if I could ask you just to maybe contextualize the supply constraints you alluded to in your prepared remarks. Meaning, how much did demand outpace supply for iPhone and Mac in the March quarter? And does your June quarter guidance also reflect supply constraints for those segments, or is that kind of an unconstrained guide as you see it today? And then a quick follow-up, please. Thank you.
Yeah. Hi, Eric. Thanks for your comments. We were constrained during the March quarter. This was primarily on iPhone and to a lesser extent on the Mac. And as we talked about in the last call, the constraints were primarily driven by the availability of the advanced nodes our SoCs are produced on. If you look forward to the June quarter, the majority of our supply constraints will be on several Mac models, given the continued high levels of demand that we're seeing. And we have less flexibility in the supply chain than we normally would. For Mac, in the June quarter, there's 2 factors that are driving the constraints. One is that on the Mac Mini and the Mac Studio, both of these are amazing platforms for AI and agentic tools, and the customer recognition of that is happening faster than what we had predicted, and so we saw higher than expected demand. The second reason is that the customer response to Mac Neo has just been off the charts with higher than expected demand. And the March quarter record for customers, we set a March quarter record for customers new to the Mac, partly due to the Neo. We think, looking forward, that the Mac Mini and the Mac Studio may take several months to reach supply-demand balance. And so hopefully that gives you a view of both Q2 and Q3 on the supply side.
It looks like the 3Q guide is why Apple's pumping here.
All right, awesome.
14 to 17%. That's better than what the street wanted. Services revenue also expected to grow better. Tim Cook said that's why we're up 280 on Apple.
Cash neutral is still a great path, but we're no longer providing this as a formal target. Could you maybe expand on that a bit? Are we thinking about any different type of capital return policy? It doesn't seem so, but maybe give a little bit more detail when you talk about making investments. Is that organic versus inorganic? Just maybe tease that comment out a little bit more for us would be super helpful. Thank you so much, guys.
Yeah, sure, Eric. Thanks for the question. Yeah, let me just kind of reiterate what we said, which is really kind of more of a comment on the capital structure. But our goal of net cash neutral has really served us well. It's been a valuable framework for us, and for our capital structure since 2018. We believe we're at a stage where we're evaluating cash and debt independently is really the right approach for us, and allows us to make more optimal economic decisions around how we best utilize our debt and cash portfolios to support the business, based on business factors and market conditions. We also believe we can manage this flexibility while also being very efficient and remaining disciplined. So with all that being said, we remain very committed to returning excess cash to shareholders. And as we talked about, our investment in the business, I think, as you know, we invest in the business, first and foremost, and then look to, kind of return excess cash to shareholders. I think we have a very good track record of being disciplined. We've returned over $1 trillion to shareholders from the start of the program, over $850 billion of which has been through share repurchases. And so, and the other piece is, as well, that's really important is, as part of that, we also have, increased our buyback authorization by another $100 billion. And that's on top of, the leftover capacity from the prior authorization. So you can see, the capital return piece is something, very important to us. And as we talked about in the prepared remarks, important to the overall approach, to delivering long-term shareholder value.
Thanks so much, Kevin. Good luck, guys.
Thanks, Eric.
Thank you.
Awesome. Thank you, Eric. Operator, could we get the next question, please?
Our next question is from Ben Reitzes with Melius Research. Please go ahead.
Yeah, hey, thanks. I'll ask two myself. The first one is, there's just been a lot of talk, and it's great to, by the way, speak with you, Tim and John and Kevin. The first question is around, there's been some commentary around an agentic smartphone. By the way, I don't even know what that means, but there's comments that about AI on the edge and that agents could catalyze smartphones, but also shift the smartphone kind of form factor, or maybe not. I was just wondering, with the rise of agents, how you would like us to think about that. Does this mean there's new products coming of a totally new form factor, or does it change the game, or anything high level you might want to say about that and that trend or potential non-trend? Thanks.
Hi, Ben, it's Tim. We don't get into our future roadmap, and so I don't want to, give too much info there, but I would just say that we're thrilled with how the iPhone is doing, growing 22% in the quarter and followed up from an incredible Q1 and having the strongest cycle that we've ever had in our history from the launch through March quarter. We could not be happier with it.
This is a big move on Apple, 284.
Well, thanks. I appreciate that. I'm sure we'll hear a lot more. Then with regard to, I guess the question around constraints and whatnot, and Tim, I may push you one more time. Try to do it nicely, though, just given my age. The big concern out there is maybe how margins go after the June quarter, given the components and trends and whatnot and all these constraints. I mean, is there some kind of overarching philosophy that you want us to think about? Do you feel, and maybe Kevin wants to weigh in on this, do you see a lot of variability in the model, or is 47, 48 kind of a range you think you might be able to stay in, or is there just no visibility, beyond June to answer this question? I think any comfort level there as we go throughout the calendar year would be so helpful. Thanks.
Yeah, Ben, let me talk about memory specifically, which I think is the root of the question. And I'll go back to December for a moment and just walk you through the chronology. In the December quarter, we really had a minimal impact due to memory, and you can kind of see that in the gross margin results. We said it would be a bit more in the March quarter, and we did see higher memory costs in the March quarter, and they were partially offset by benefits from carry-in inventory that we had. For the June quarter, and what's embedded in the guidance that Kevin went through earlier, we expect significantly higher memory costs. They are also partly offset by the benefit of carry-in inventory. And then where we don't give color beyond June, I can tell you that beyond the June quarter, we believe memory costs will drive an increasing impact on our business. And we'll continue to evaluate this, and as we've said before, we'll look at a range of options.
Bullish
Okay,
memory
thanks, Tim.
again?
Yeah, thank you, Ben.
Thank you, Ben. Operator, could we have the next question, please?
Our next question comes from Michael Ng with Goldman Sachs. Please go ahead.
Hey, good afternoon. Thank you for the questions. I have two as well. First, given the success of the MacBook Neo, I was wondering if you could talk a little bit about how it's helped drive penetration with new customer segments, whether that be education or value or emerging markets, and then how do you think about opportunities in underpenetrated markets more broadly, and how will your future product roadmap inform that strategy? Thank you.
Yeah, right now we're supply constrained on the MacBook Neo. The response has been, we were very bullish on the product before announcing it, and but we undercalled the level of enthusiasm that would be with it. And it's very much focused on getting the Mac to even more people than we were reaching before. We're very focused on customers new to the Mac and customers that have been holding on to their Mac a very long period of time. We're doing well with both of those. As Kevin alluded to in his comments, we're seeing school systems like the Kansas City Public Schools that are switching from Chromebooks and Windows PCs to the MacBook Neo. And I'm hearing anecdotally more and more of those kind of stories, both happening at the school system level and at the individual consumer level. And so we could not be happier with how things are going at the moment.
Great. Thank you, Tim. And for the second question, I wanted to ask about advertising within services. I think Apple introduced new inventory to ads on the App Store earlier this year. Has that new ad inventory on the App Store been a notable contributor to the services growth and outperformance in the quarter? And then could you talk more broadly about your ad strategy, given the plans to also introduce ads to Maps this summer? Thank you.
Yeah, Mike, it's Kevin. Thanks for the question. Yeah, in advertising, we did see year-over-year growth in our advertising business. As you alluded to, we recently did introduce additional ads, across the App Store search results to provide developers with more ways to drive downloads on platforms, that users trust. And this summer, as you said, in the US and Canada, Apple Maps will feature ads during key search and discovery moments, creating a new way for local businesses to reach customers and explore new places. But importantly, I think, we believe it's possible to help businesses of all sizes grow via advertising while still delivering a great customer experience, while also importantly respecting people's fundamental right to privacy.
Thank you, Kevin.
Thanks, Mike.
Thank you, Mike. Operator, could we get the next question, please?
Our next question is from Wamsi Mohan with Bank of America. Please go ahead.
Yes, thank you so much. Tim, you noted higher impact from memory as you look beyond the June quarter. Clearly, you guys have a lot of scale, supply chain efficiencies, relationships from a long time. As you think about product position relative to your competitors, so when you think about product position and pricing relative to competition, do you think in such times of dislocation that Apple would be strategically more focused on share gain, or where potentially you don't raise pricing in perhaps lower ends of the portfolio where your competitors are struggling, or more focused on profitability? Like, what's the right framework for us to think through as you enter that period? And I have a follow-up.
Wamsi, we will look at a range of options with memory costs increasing. And so I really don't want to go beyond that at this point.
Okay, Tim. As a follow-up here, how's Apple thinking about the broader monetization, maybe following Ben's question here in the agentic AI world? So what parts of the stack do you think Apple will be focused on internally versus maybe leveraging your partners? I mean, we have some early looks into where you are developing relationships, but as we think longer term, do you think Apple will invest more? Where will Apple invest more heavily over the next several years? And is this at all related to your net cash comments in terms of perhaps building out more infrastructure as we enter an AI-centric world? Thank you.
We are clearly investing more. You can see that in the OpEx numbers. And if you click down on those a step deeper and look at the R&D area separate than SG&A, you'll find that R&D is even accelerating much higher than the company is. And so we're clearly investing. We're investing in products and services. And we see opportunities in both of those. And we could not be more excited about how the future is playing out.
Yeah, and I think Wamsi, as we've talked about, building on what Tim said, from the start, we said we, believe AI is a really important investment area for Apple, and we're going to be doing that incrementally on top of what we normally invest in our product, roadmap. And so I think just wanted to reiterate that point as well.
Okay, thanks, Tim. Thanks, Kevin.
Mm-hmm.
Awesome.
Yep.
Thank you, Wamsi. Operator, could we get the next question, please?
Our next question is from Amit Daryanani with Evercore. Please go ahead.
Yep, I have two as well. Good afternoon, everyone. I guess first one, maybe just going back to the iPhone performance, which, for a couple of quarters, you folks have had 20% plus growth despite the supply constraint. And I think the guide sort of implies the momentum will continue in June. I'd love for you folks to just maybe double click and talk about what are the levers that's driving this sort of impressive iPhone growth despite the supply constraints, and then sort of what is the durability of this growth?
Yeah, if you look at it, it's the iPhone 17 family that's driving it. And that is, as you point out, is despite the supply constraints that we're experiencing. And it's the things that are driving people to the 17 are people love the design. People love the performance. They love the durability. They love the camera. They love center stage. And they love that Apple Intelligence is integrated across the platform. From where we're seeing the growth, it is amazing. We're seeing double-digit growth in the majority of the markets we track, from the US to Latin America to Greater China to Western Europe to India to Japan to Southeast Asia. And we set a new March quarter record for upgraders as well. And what's driving all this is that the customer satisfaction for the 17 family in the US, as an example, is 99%. These numbers are just unheard of. And so we're thrilled with how things are going.
Perfect. Thank you. And then, Tim, I think we have you for one more earnings call, but I would really appreciate if you could kind of share a bit about the upcoming transition. You have historically, I think, talked about the advice that Steve gave you when you took over, and I might be paraphrasing this, but it was around, don't ask what I would do, just do the right thing. That's really been a big win, I think, for Apple and shareholders over the last 15 years. Would love to understand, what advice are you giving John to help him build on Apple's strengths while shaping up the next chapter for the company? Thank you.
Well, I think Steve's advice to me lifted a huge burden, and so that advice did well for me and over the 15 years. For John, I think my advice is that, or what I've told him is that one of the most important decisions he'll make is where to spend his time, and I would spend it where the greatest benefit to the company and the users are. And never forget the North Star for the company. We're about making the best products in the world that really enrich other people's lives. And if you keep focusing on that and make your decisions around that, it will produce a great business, and we'll be able to build more products and do it all over again. Thank you for the question.
All right, guys, that is it for me. I've got to get out of here. I will leave the link right here in the chat. If anyone can click that link and get right back into the call. Apple getting a pump on the big guidance beat, 13 to 17%. Street did not expect that. 280. It's been there before. It's been at 288 before, so it's not like it's never seen it. Passing 4 trillion right now after hours. Hopefully can stay above 280, but that was once again in line with what every company has delivered. Not every company's stock like Amazon or Meta has benefited, but all of them increased guidance, increased earnings momentum. A lot of them increased capex. Apple did not, but all of them saying the ROI. I think the debate about if there is an ROI from AI capex is kind of over. It's just a question of managing the costs. And obviously the memory names Tim Cook talked about, super, super bullish in terms of their pricing power. All right, I got to run. I'll be back tomorrow. Again, sorry I missed the market open today. Voice should be good for tomorrow. We'll have a lot to cover tomorrow morning in the open. And it's Friday, first day of May. Today's the last day of April. Big tech needed to crush. They indeed did crush. We still have a bunch of earnings. We got Palantir next Monday. Hopefully the rest of these earnings continue to do what they got to do. But if you own big tech, if you own the S&P, if you own the NASDAQ, you're betting on America. These companies absolutely did what they need to do. S&P all-time highs. Hopefully that continues going into May. Thank you, everybody. Appreciate it. I'll see you guys tomorrow on the market open. Bye, everybody.